Here we are in week number 4 already. Time is flying, even though we still have quite a bit of time to go. We are moving along rather rapidly. I trust everybody was able to get the textbooks. Is that a yes?
Yes, sir.
Okay,
Yes, most of it.
uh,
Not all.
not everybody. Well, the reason why I suggested you, obviously you get your textbooks is so that you can follow along and stay on top of your reading. And also, this accounting class, I don't know if the Institute has told you, but this accounting class does have a part 2 to it, which I encourage each and every student to take. Those of you who pass this particular class, and I expect that should be everyone. That's, that's my objective with you, so that you can go on and do your second part before you get settled into something else and never get to it. And that would be unfortunate because that is really kind of the rounding for those persons who really want to have a substantial basis in accounting. Yes, which means you have a big obligation. You have to show up every week now.
Right, sir.
We are becoming an endangered species. I was trying to solicit a comment from someone. No comment? We are not endangered yet?
Far from it.
Far from it?
Yep.
Why do you say far from it?
I mean, I have a lot of clowns in that group, but you're far from it. Still have some good guys going.
A few good guys are left.
Yeah, you're still represented. Maybe not well, but you're still represented.
My. How did we get to this? Does anybody know? How did we get to this point?
You have to tell her?
Sorry?
You have to tell her.
I could. I just want to solicit some feedback first. A little non-accounting stuff, but it does relate to accounting because it's still accountable to all the accounts that need to be accounted. So how did we get to this point? Owen, okay, you're a guy. How did we get to this point?
Well, I think it's more what society expects of us. It isn't macho for the guy to take the lead and, you know, all of that. I work in a male-dominated area,
What
but the
area is
women,
that?
them are the ones who are leading the organization.
What area is that?
Housing,
So
the
how you could,
technical area.
so how you could be working in a male-dominated area and it's headed by female?
Females are the ones taking the lead.
Why aren't we taking the lead anymore?
I don't understand that.
That is the question. Why are we not taking the lead anymore?
Passivity is the order of the day. That's what I see it as.
But when Sir Lyndon and that gang were here, they were not passive. They took the lead, didn't they?
Yes, they did.
So what happened after 20 years ago, the last 20 years in the Commonwealth of the Bahamas?
And we allowed a lot of foreign elements to come in and dominate our society. I think that's the shift.
My. That is a very serious thing.
I don't think that our society focuses too much on the young men.
Why? Why
Um,
have we stopped doing that? You're
I
right.
don't know.
You're right. The question is, as a matter of fact, you're absolutely right. But now the question is, Why have we stopped doing that in the last 20 years? What is the reason for that?
Hmm.
We have a lot of female leaders. And you go into school, the males are used to a woman being their authority. So we just continue in that vein as we grow and take a back seat.
I think it stems from broken homes too, you know. Like we don't have, there's no male dominance in the home.
No
You have
doubt,
a lot of,
no doubt.
so
Yeah. School has a very great influence, but the greatest influence in any country, anywhere in the world, is always the home. And whenever the home is weak, all the other institutions, including the entire country. So you're absolutely right. In my estimation, it has something to do with the fact that there aren't enough male teachers. That helps, but certainly the weaknesses in the home, the absence of fathers, the presence of fathers who are not present, and all these kinds of crazy things. And this thing that we've done to allowing boys to roam the street, not do their homework, not teach them proper skills, say they are boys, let them do whatever they feel like doing while Maria goes in and reads and learn her arithmetic. Why did we allow that to happen? The only problem with that is it creates an unbalanced society. And anything that is unbalanced is going to end up chaotic. As you
yeah.
can see, pick up the paper every day. It's getting more and more chaotic as we speak. And until, like she said, we go back to home and fathers start taking the reins again. It's not a male female thing. It's just a thing that worked well all through history whenever we decide to do it. And I
Good
keep
morning.
telling people, question?
I was just saying good morning. This is
Good
Indira.
morning, Indira. How are you?
I'm well. What are you speaking about? I just got on the call.
Oh, can somebody tell Indira what we're talking about?
How males are being an endangered species right now.
Yeah, we were
Oh,
saying that it appears as if men in the Bahamas, their presence is becoming endangered, unlike the way it used to be 20 years ago and before. And we were trying to determine what is the reason for this. Somebody said it's the schools that don't have enough male teachers anymore. And somebody said that it's the home where fathers are no longer present in the way that they should be. And I was saying, yeah, that's no doubt the most dominant reason. And I keep telling people who would listen, God does not make any mistakes. When he set this thing up, it wasn't to set it up that men were superior to women. He never said that because he doesn't indulge in human nonsense about this superiority nonsense. That was not why he set it up the way he did. It's time we go back and check out exactly what he said. Because the more we do that, the better things work always. And every time we move
I
away
think
from
we,
it, go ahead.
I think we've completely lost our sense of community as a whole. Like everyone has a role to play
And
because yes, you can blame school, you can blame parents, but each of us have an obligation.
now,
Um,
which is true. The problem is, where do we learn our obligations? We learn them at home. So if the home is not
true,
properly structured, then we're going to have all kinds of strange obligations or none at
true.
all. That's my whole point. So yeah, you're right. The question is, where do we learn them? We learn them as little children in our homes. That's why when we grow up, no matter what we become, depending on what home we come from, that will be what we represent. And sometimes we don't even know why,
Exactly.
because we get it when we're small and we don't even know when we're getting it. It's like language. We don't know when we learn language, we just know we're saying it. No matter what language it is, the
Yeah.
same principle.
You become a product of your environment.
Environment, no question. And what is the governance for our environment? It's supposed to be the old-fashioned word. People tell me the Bible is old-fashioned. Never further from the truth. Everything I checked in there still is applicable.
Can I share an observation?
Please do.
At housing, when we go into areas to develop a subdivision, we
Yes,
will go in there and make an occupational survey.
yes,
And in our fire trail subdivision, we met person squatting. So we go in there, interview, bring in the people and ask questions.
yes,
And about 11 women. I said, but why did you marry this Haitian man?
yes,
Because they take care of their children. You divorce your husband and marry the Haitian man because they take care of their children. They do come home. Okay. And like you said, it's society and the presence of the male in the home. And all of them said that was their reason. Of
yes,
the 11 women I interviewed.
which is most
Oh,
unfortunate.
wow.
Yes.
And it is unfortunate because taking care of your children is important and it's a good thing. But there's also another social consequence because, see, if we come from Ireland, no matter where we go in the world, we're still going to be talking about what is what. Irish, correct?
Correct.
If we come from Jamaica, no matter where we go in the world, we can always be talking about.
Jamaica.
I wonder why. Because that's who we are inherently, correct?
Mm-hmm.
And that's okay. There's nothing wrong with that. But you have to understand that with all of these different things that are happening, there are other issues that come along with them. So if I have a problem, for example, with same-sex marriage and I walk into or participate or get married to or whatever a situation that has same-sex marriage implications, then I can't talk about that anymore because I'm married to it or involved in it
Right.
or associated with it.
Mm.
So I have to shut up now because my spouse is connected to it. Mm.
Coming from a school background, from what I've seen, observed, it's like the parents no longer want to be accountable. There is no accountability, like none.
No, and the question is, when did that happen and why? You're right.
I don't, boy, I don't know.
I
It's
know
our
we
culture.
do.
We have this sense of entitlement, and like over the years, just I don't, boy, I don't know.
I know it's a very confusing issue, Indira, and it's something for you youngsters to think about going forward. You're absolutely right. All right. We're copying the
No one
American.
wants to be, no one wants to be responsible. Like the parents and the kids, they're actually friends. You know, they party together. You know, they have them on a level where back in the day, like those values are just no longer present. Those respect
Yes,
values and
yes,
principles that were once entrenched in our culture. I think because there's been so much diversification and we've become this melting pot, we've adopted the attitudes and norms of other cultures. Like we don't have a sense of identity anymore.
that's what I mean by
So,
whatever and whomever you marry and duplicate, that is what we
right,
and we don't have to marry, even associate. Because you know we have all kind of association that does not involve marriage at all. But
right.
all of these things come to bear, whether we like it or not. And then when the soup gets all mixed up, it's hard to unmix it.
Hmm.
And
Yeah,
now we are
yeah.
currently in an unmixed situation. God forbid. Can it ever be resolved? That is the question for you youngsters going forward who have children.
I have a class. I have a class, maybe this one particular class, 80% of the students may be of Haitian descent. And I mean, for them, it's all about, the gold teeth and their shoes have to be. I mean, they might as well be shoemakers. They clean shoes all day,
Yes, because
and their uniform has to be pressed and this and that. So it's about image for them. So it's like I don't know if they're trying to find their identity through
no,
that or through
no, they're not
like I
trying.
don't know what it is. Like they just
I'll tell you what it is.
but when I went to school, when I was in high school, the Haitian kids were the ones that sat up all night with a candle because they didn't have electricity. So they can maintain this 3.4 point GPA because they know at the end of the day, education is their only exit. But
Listen,
these kids now, they don't care about that.
yeah, because
Like
now
they don't.
now they're adopting a whole lot of the new age Bahamian American culture, where
Mhm.
it's all about glitter and fast returns rather than the slow boat to learning and development, unfortunately. And that stuff has hit the Bahamas really hard, where we're into how we look and experience rather than commitment and responsibility, unfortunately.
That's why we can't evolve to a certain degree. That's why it's hard to to pass the mantle on to this next generation because they don't have they don't
There-
have the grit.
There's
They
no,
don't have the tenacity. That there's nothing to pass on to them. Like they don't have it. Like
well,
you,
I'll
they
tell
don't, they don't have it.
you, imagine. And why don't they have it? Let me ask you something, Indira and everybody else. Well, since Indira's on, Indira, if I said to you 1 plus 1, what would you tell me?
True.
How do you know it's two?
I
You
guess
just, you just,
prior it would be
yeah,
prior knowledge that would have brought me
yeah, you just know. It's like language. You just
right,
know, right? Now, watch this.
right.
Do you remember when you learned that 1 plus 1 is two? No. What am I getting at? We learn our real hardcore values as children. Somebody has to teach you. And so these children have
True.
nothing to carry on because nobody taught them. They cannot be what they are not taught. And I keep saying that from one decade to the next as we seek to make excuses to blame the children after they've grown up. How the hell the school system and the home could allow children to grow up without proper training and education, and then when they can't read, write, and be a decent individual, we say, what's wrong with them? Well, what's wrong with them is what's wrong with us, because we didn't teach them. That's
True.
the problem. And until some generation get back to the fundamentals, it'll never get back to what it used to be. It will only get progressively worse, unfortunately. Okay?
One
Wow.
more observation.
Yes,
I work in the civil service.
yes.
I, with the exception of the boss, the head, I'm the only male in administration.
How come?
I find my daily task is fighting to keep my head above board. It is
I
like,
know.
where do you think you are going? We can put you in your place.
Yes.
So I have to spend the day doing my work and somebody else's work to make sure I advance. Not
Um,
career wise, but my work and the people who I'm working for, the public, get their due.
I understand. And Owen, that is an interesting question, and it's an unfortunate one, and it's not. How is it that you're the only one? You ever wondered about that? Why
Apparently,
is it that you're the only one?
well, apparently most males would not enter the public service
Says
where they
who?
feel they could make more money. But the few
Uh,
that are there, I don't understand why they either go into technical or they never advance to higher levels
Owen,
in the public service.
let me tell you a little secret. Let me tell you how the public service works. You go in, you work every day in one form or another, and you wait your time, you politic, and maybe you get where you think you need to be. That's how all public services work. But you cannot do any of that if you're not hired. You can't do anything unless you're hired. You have to be hired first. So why aren't we? See, we could say that they're not, but we don't really know. That's just the current excuse for what we're doing. The question is, why aren't we hiring males in the public service? They are out there to be hired. They're not all looking for high paying, quick money, you know.
They
Many
are
males,
there. They are servicing the environmental and the low grade stuff. That's what most of them are. They're doing those things, sweeping the road and cleaning up and stuff
yeah,
like that.
but Owen, there are a lot of young men coming out of school and college who are educated who will take a job with somebody who hire them. I'm telling you, they're just not hiring them. Why? I'm not talking about the guy who wasted his time in school and didn't learn how to read. I'm not talking about him. God forbid that's another problem. I'm talking about that middle of the ground group who don't want to be doctors, lawyers, engineers, and all that. They have a big bunch of them in the middle, average, C, B plus, C plus, who will take jobs in the public service. Nobody hires them. Why not?
You remember when they had the big debate over the director of public prosecution? They gave it to the male. If he didn't get that post, all the AG offices were being run by women.
So now we're getting warm.
Okay.
I asked a question, but it was actually a rhetorical question. I know the answer. All right. And what you just said is moving towards the answer. And I will tell you, that's all part and parcel of the problem we have with the male not being in the home and all that stuff. So now we have this unbalanced situation where now, because women are now predominant in many, many organizations, they're only hiring women, no matter how qualified the male is. And so now we have another battle raging, which is going to become a big problem down the road if we don't create a balance. In the
What
old,
what also is having this social stratification? Okay, I born in the Eastern Road. Me, I come from Baintown. I went to CC Sweeting. I went to Queens College. I went to St. Augustine's. So we can put you in your place. You don't belong in our league. Don't care
uh,
how hard you work
yeah,
and
and
you
that is
strive for excellence.
and that has always unfortunately been the case from back in the day when certain students went to St. Andrews and government high and private school and all that crazy stuff. That's an old problem, absolutely. But we do have a lot of issues outside of that, the middle of the ground. Not everybody in the private school is a genius. Many of them would take jobs, especially males, if they offered it. They're just not being offered it. When I was a young professional, we hired a balance of men and women in all organizations around the Bahamas. Anyone you walk into, you had a comfortable group of men and women. Now it's not that because men hired men and women back then. Nowadays, it appears as if women are only hiring women, no matter how qualified he is, because it's now become a battle of the sexes, which is another big problem. And that if we don't find a way, just like the thing with males in the home, if that doesn't find its resolve, we're going to have even bigger problems down the road, unfortunately. And it's not about chauvinism at all. It's a clear cut situation where it's not happening anymore. And when I look at these things today, and I look back in the day when I was a youngster, man, everywhere you go, I was part of the hiring of many people, male and female. There's always a balance in most organizations. Now we have a very serious unbalance and a deliberate effort to keep it that way. And remember, if you keep things unbalanced indefinitely, sooner or later, it's going to become another kind of problem. Okay. So I just kind of throw that out. Is this an accounting issue? Yes. Because if sooner we take an account of this stuff and try to do something about these things, the sooner we could try to bring the Bahamas to some semblance of civility again. Because whether we like it or not, we could put our head in the sand. But you can put your head in the sand as long as you want. Problems don't go away. They just continue to escalate. Okay. So you guys have some interesting things to deal with going forward. I'm sorry. I'm glad as you guys. I've had my battles back in the day trying to talk to people about these things. Nobody listened then, and nobody's certainly not listening now. So it looks as if, like everything else, everything has to explode somewhere before we decide to do something. And I keep telling people, prevention is still better than.
Sure.
Sure.
You know,
Absolutely. I said it 40 years ago when I was a youngster in an afro. I say it 40 years plus now. Prevention is still, even though we're not doing it, we keep trying to cure stuff. And no or little effort is being made to prevent stuff. Trust me, curing will bring you guys a nightmare. And I say you guys because you guys are the future. It'll be a nightmare for you. And you will remember I said that was, damn, Mr. Wilkinson was right. He said this would be a nightmare. It's already a bloody nightmare. It's only going to get worse until we start preventing rather than seeking to cure. Damn, it's a big word.
last word of the day, Mr. Wilkinson.
Yes.
I was told in indirectly in a large congregation, because me, that person had spoken a few years ago, and that person said, I noticed directly to me, the majority is always right, don't care how wrong they are.
That's what they told you.
Indirectly, yes.
Wow. That is unfortunate and it's still untrue. But it's as old as Methuselah. We always had that thing whenever we wanted to get away with murder or anything else we wanted to get away with. We always had this thing about the majority is always right. Unfortunately, it continues to be untrue. Only right is right. Doesn't matter whether it's a majority or not. But we're moving away even from that because we're busy trying to do whatever we feel like doing. And the hell with the rest. And that is most unfortunate once again. And so as a result of that, what do? If you're not on the side of the majority, it doesn't matter if you're right. They shut you down in one form or another. So you continue to perpetuate whatever the current feeling is or current movement is. Okay? And that is unfortunate. And that's why people want to get rid of that thing we call the Bible, because the Bible is very structured and consistent. We don't want structure anymore. And we don't want consistency. We want to do whatever we feel like. If I feel like it today, then I'm a cow today. Tomorrow, if I feel like being Indira, I will be Indira. And I dare anybody to mess with me because the law even protects me now. I feel like a girl today, I'm a girl. And I expect you to address and so on. So we have this whole crazy thing that you guys have to deal with going forward, and it's only getting more intense by the day. Okay. So something, some food for thought, something to take, see, account of. This is what accounting is all about. Remember, we talking about accounting in terms of debits and credits and financial transactions, but that's not the only kind of accounting that we have in the world. The word accounting has a broad range. I'll be damned if it's only financial transactions. Okay. All right, so I thought I'd just leave that with you youngsters to think about because you guys have a lot on your plate. Those of you who have children, you have some serious things to think about. Those of you who don't have children and plan to have them, you have some serious things to think about. Those of you who have and planning to have male children and they are your children, you have some serious things to think about because your sons will be facing some very serious challenges in the future from none else than your own gender. Unfortunately, it's not supposed to be that way. It's supposed to be balanced where we're working together, not in an adversarial situation against each other. And that seems to be the growing thing. Husbands are fighting with wives are fighting with husbands. People in the job place are fighting with each other. I'm this, he's a male resume, throw in the garbage, female, put on the desk. All kinds of crazy stuff we're doing. The only problem is it's going to come back to haunt us later on. Because remember, many of you have sons, and many of you will have sons. What then for your own babies, sons? See? Once it gets that personal, it becomes a very interesting situation. The solution, balance. The ultimate solution, go back to the original thing. Because remember what I said, you don't have to be a fanatic to know that God makes no mistakes. Whenever he says stuff, it's a reason. And whenever we follow those basic things, things work very well. Whenever we violate them, all hell breaks loose every single time. And I have proven it throughout my entire life. I'm not telling you what I think. All right. Okay. Sorry, there's my epistle. Okay. But it is an accounting issue. So last week we started off with the looking at financial transactions and how to journalize them and how to post them. I hope you guys have had a chance to read chapter 2 and even chapter 3, because that's really the basis of what we do today. So we're going to roll through a series of transactions so you can get familiar with what these concepts are. They're very fundamental. Remember, this is the ABC of accounting. If you learn this well, you have a good foundation. If you don't learn it well, your foundation will be like a little on sand. All right, you'll still remember some stuff. It'll be a little sandy, though a little shaky. All right, it wouldn't stand the test of time. Okay, and then after we're done, I have some homework assignments that I will give to you for you to practice these things, because accounting is 80% or more practice. So I want you to go home and go ahead and actually do this stuff, and then send them in to me. And I expect that if you get stuck on any of the issues, you will raise it in an email or something, or when we come back to class, you will raise any particular points that you may have encountered in doing these problems. I have selected them very carefully so that you can get into it. Please, it is not going to be an assignment that you can do the night before, like next Friday night. Some of you might be able to do it because you're just totally ingenious. You like pressure, you like stress, you like being up all night before class and then passing it in. But I would not encourage that. I would encourage that you start doing them today. All right, and do some as much as you can today, as much as you can tomorrow. So you know when the work week starts, it gets a little crazy. You may not be able to find the time to put into this thing, or you'll have to cut your sleep time short or something. Okay, so please start working on your problems today as soon as I assign them, so that you'll have enough time to go through the process. Okay? All right. So we said last week that the initial investment for Joan Miller or Tom Jones in your new text was $40,000. What was the journal entry for that initial investment for starting the business? Anyone? What was the initial investment?
The cash of 40,000.
The cash of 40,000. Notice what account did we debit?
The cash account.
Yeah, because $40,000 is invested into the business. It goes in the company's cash account. And which account did we credit?
The capital.
Yes.
Owner's equity.
Yeah, the owner's equity or capital account, which is the investment account for the owner. Okay. Notice those words. If you've been reading, those words wouldn't be strange to you. If you've not been reading certain words that I say, you'd be like, what the hell is that? Okay. That's why you have to read. Do not leave any of the reading out. Like, don't say, well, I don't think I'll read that page or something. Don't do that. Just read it, because in these pages, there's a wealth of information, a wealth of examinations and examples about different companies and how this stuff applies. So please go ahead and read that stuff so you can be, quote unquote, enlightened. All right. So after the journal entry is made, what do we do next in this example? We post the journal entry transaction to the
Ledger.
to the ledger or the T accounts. So we have a cash account, debit for 40,000. We have an equity account credit for 40,000. It's not complicated at all once you do it. You have to do it, see it, digest it. If you just skim over it, you're gonna get stuck. Also, notice under each transaction that we're doing, there's a comment. Do you see the comment right underneath?
Yes.
Yeah, you should read those comments, by the way, because they tell you again what is going on, even though you might remember. Some of you can look at those transactions now and see what happened. Some of you need to read the comments, and I encourage everybody to read them, even if you already know. It solidifies what you may know or may not know. Okay? What's the second transaction on July 11th? What happened? Sorry, July 2nd.
Supplies were ordered,
For how much?
$5,200.
Yes. So supplies were ordered. Is that a transaction for accounting purposes?
No,
No,
Oh, why is it not a transaction for accounting purposes?
There's no exchange.
Yeah, there's no exchange of any kind. All you did was ordered, nothing else. So please remember that. That's very important. In accounting, unless there's an exchange of some kind, exchange of goods and services and payment or something of that nature, there is no transaction. Nothing is to be recorded. Very important. What about July the 3rd?
rent was paid in advance.
Yeah, rent was paid.
Paid in
but-
advance.
Aha. Not only was it paid, but it was paid in advance.
Advance.
For $3,200. Now notice the journal entry for paying rent. And what does in advance mean?
Prepaid.
Before it's due.
At that time.
Yeah, it's paid before it's due. So notice the journal entry we make when it's paid in advance. What do we debit?
The prepaid expense account.
Yeah, we debit an asset account called prepaid rent expense for 3,200. And what do we credit?
Yeah,
the cash
What?
account.
Why do we credit cash?
oh, I think this is where it became an asset, where the cash would be going down.
The
Yeah,
cash decreases.
cash decreases. All right. So every time, remember those normal balances that we looked at? Remember I said you have to sing them, dance them, and shower with them until you get it? So you have to know those normal balances, the plus and minuses for each of these accounts. Remember we said debits do what to asset accounts?
Increases.
And
And
credit?
increase it,
And credit?
decrease,
Yes. See
decreases
that?
it.
And so cash is obviously a what type of account?
Asset.
Asset.
Asset. So debits would increase it, credits would decrease it. So the principles apply every single time. All right. The debit to prepaid rent, that's an asset because the rent is not yet due, so we own 2 months of rent because we haven't used the rental up yet. So we treat that as an asset called prepaid. Okay? It's just a rule. Okay? The comments will tell you what I just told you. That's why I said to read it. Okay? And read all of it too, because sometimes you get tired reading. I know. Trust me, I did all kinds of accounting in my lifetime, and there were times I'm like, should I curse God and die, or should I just keep reading? Okay. All right. What's the next transaction? July the 5th.
Receive office.
Receipt office supplies ordered on the 2nd, and an invoice for 5,200. So now,
It's time to pay the bill.
aha, because now we received it, correct? We received the supplies and the invoice for 5,200. What journal entry do we make?
Debit, office supplies.
We debit the office supplies, that's assets because we own them. And
We credit accounts payable
why?
Money being paid out.
because we owe the money. The money is due to the
Because we
client.
owe the money.
Mhm.
Remember, the transaction said it was on credit. Do you remember that?
Mm-hmm.
Please read your transactions very carefully. Accounting is like real life. if you read somebody incorrectly, you might marry the wrong person, correct?
Correct.
Same thing in accounting. Only thing is more serious, but it's serious in accounting too, because it can end up in millions of dollars being lost as well if you read stuff incorrectly and therefore post it incorrectly and send the incorrect check and so on. Do you follow? So you have to be very careful in reading your transactions and questions in accounting, because if you read it too quickly or too casually, you could miss the important stuff like keywords like on credit and make the wrong entry. That's why people in accounts need to be properly trained, and after training, they have to be careful, because even with training, you can still make mistakes for more than one reason. Because if you're on the phone while you're trying to do an entry, you might put the wrong thing, correct?
True.
Or somebody's interrupting you and you're trying to do both at the same time, you might do the wrong thing. Okay, so this thing is very real, happens every day. All right, so we debit supplies for the asset and credit accounts payable because it's credit. We haven't paid that bill yet. And as you can see in the accounts, when we post them, the beauty thing I like about these illustrations is that they're clear as sin. All you have to do is follow through and do it. If you just glance at it, then you're gonna have problems later on. But we've made it so clear. That's what I like about this text, that you just have to be totally in left field not to get it. Okay? Even added colors and nice diagrams and nice clean illustrations so you can see clearly how each type of transaction works. Okay? What is our next transaction?
She decides to buy some more office equipment.
Yeah, but what's the total?
16,320.
Did we pay for all of it in cash?
No,
No, some in cash, some on credit.
Aha. So while you're pondering that thought, that journal entry, let me finish my register. Hold on it. That's what I was on before we started talking about that issue in the Bahamas thing. All right, Ashley, are you there?
Hi, I'm here.
Wonderful, Ashley. Way to go. Crystal Ingram. Okay, Crystal looks like she's on a holiday for real. Akaria.
Period speaking.
Okay, Akaria. By the way, Akaria, are you related to the Kemp family in the Bahamas?
In the Bahamas, you mean Andres?
Andres Kemp. When I say the Kemp family in the Bahamas, I'm thinking Audley Kemp and his gang, who used to own all the stuff on East Street and everywhere else. No?
No.
Okay. So you're related to the Kemps from Andros,
South Andres.
South Andros. Where is Kemps Bay, Carrie? Is that, what part of Andros is that?
It's South Andres.
South Andros. The reason why I asked, because my sweet beloved grandmother was from Kemps Bay, Andros originally. That's why I asked.
What's her name?
And she was Whitfield. Her father was a Whitfield, boat captain back in those days. Okay. In fact, I understand there were a lot of Whitfield brothers who went from island to island, had families throughout the Bahamas and all this stuff. So she was one of those children from a million years ago.
Okay.
Yeah. So when I hear Andros, I'm like, okay. Okay. Thank you, Akaria, for that little. Are Andros people still the best Bahamians?
I guess.
I'm just being a devil's advocate today. Okay. Samantha Knowles.
Present.
Okay, Sam, you're still there. That's good. That's good. Fabienne La Rochelle.
Present.
Doggone it. Fabienne, were you here last week?
Yes, sir.
Oh, sorry. It looks like I missed you last week. I need to.
You asked me the same question last week.
My. Okay. Thank you, Fabienne. Let me just make sure I get this right.
No.
Okay. Chandel?
Shadell, I'm here.
Shadell. Were you here last week, Shadell?
No, I was absent.
Okay, okay. That's wonderful. Welcome back. You're here at the right time today. Cheryl, are you there?
I'm here.
Wonderful, wonderful. Vivinette.
I'm here,
Yes,
present.
sure. Rochelle Roberts. Rochelle?
I'm in present.
Okay. Did I ask you last week if you related to Rupert Roberts?
No, that's Michelle Roca. Sorry.
Roca. The other Michelle, not Rochelle. Michelle. Okay. Oh yeah, I was asking about the Loftus Roca thing. All right. Rochelle. Are you there? Roberts. Okay. Dion Stubbs.
Present.
Yes, Dion. Okay. Indira. Yes, I saw that pop up. And Melissa. I don't think Melissa. Okay, great. So we can get on with this crazy stuff. What's the journal entry for this transaction? What do we debit?
Office equipment.
Equipment.
For the full amount, and what do we credit?
Cash and
Cash,
account
the
payable.
13,320,
Yes.
and accounts payable for 3,000.
3,000,
Yeah. Why do we credit accounts payable for 3,000?
because we
It's
agreed to
still
pay.
owe that, right?
Okay, because that's the amount we agreed to pay later.
Mhm.
Okay. So far, so good. You guys looking like you're understanding this crap. Not crap, you know what I mean? That must mean that you have actually been looking at this, because sometimes if you're not looking at it and trying to digest it, it starts to look like a bunch of gobbledygook. And then you start getting angry with everything around you, like, why am I not getting it? All right, notice the posting, same again, office equipment debited, two other accounts, cash and accounts payable. Please take note of where those postings are. If you are stuck at any point in today's lecture or while you're doing your homework this week, uh, trying to figure out like why this and why that, please contact a colleague or send me a note so you can get it sorted out if you cannot work your way through it after following your textbook and reviewing the information again. If you do your research into any part of the question, you still can't see what to do with a certain thing, then please reach out. That's the whole idea. Okay. Payment of a liability makes a partial payment of how much?
2,600.
2,600 on the office supplies. What was the original price of office supplies?
I think
Original cost.
5,200.
How much?
Was it 5,200?
Question or statement?
Yes,
5,200.
5,200.
Yeah, you're right. I'm just needling you. It is 5,200. So 2,600 would be what percentage of the amount, total amount?
Half, 50%.
50%? Absolutely. And I'm asking you these arithmetical questions just so that you can be thinking accounting while you're in accounting. If you ever get into accounting, this is how accountants think. Okay. Yeah, that's half of it. So what account do we debit for the 2,600?
A debit accounts
so,
payable.
accounts payable,
Okay, and we credit cash because that's how much we paid. What type of account is accounts payable?
Liability account.
liability,
Absolutely. Now I'm getting the feeling that you're understanding the language of accounting slowly but surely. See, when I say what type of account, thank God nobody said, what do you mean by type? And if you did say, what do you mean by type? I would say that's an excellent question. Type means, see, because that's how I want the interaction to be. Don't be stuck. Don't worry about what I'll think or somebody else will think. If you don't get it, raise a question. If somebody doesn't like it, she doesn't know that, or he, no problem, the devil with it. You want to get it. All right. Notice the postings. After this transaction is posted, what is the balance in accounts payable? After the posting, what's the balance in account payable?
52 minus 3,000. 5,200 minus 3,000. It's 22.
My. So I did get somebody. All right, not quite, but you're getting warm. Does somebody else wants to try? What's the balance after this payment in account payable?
Is it 5,600?
600.
Is it what?
5,600.
5,600.
Well, let me help you along. What was the balance in account payable before the payment?
It was 8,200.
It was 8,000?
You're looking at the same thing.
Okay, y'all losing me here.
Okay, let's back up. The
Eight.
transaction on July the 9th.
Was 2,600.
Okay, so we're on the same page then.
Okay. Prior to that payment, it was 8,200.
Was it?
Accounts payables.
No, it was 8,200?
That's what I'm looking at.
Okay, and then,
We made a payment of 2,600,
okay,
and that'll bring the balance down to 5,600.
to 5,600. Okie dokie. Does everybody see the transaction for 2,600? The payment?
Yes, I see the 2,600.
Okay.
2,600.
Does everybody see the transaction in the cash account for 2,600?
Yes.
Okay. So how many transactions do we have in cash or payments made at this point? According to what we're looking at,
3.
3 transactions.
3 transactions. Now, what are the total credits in account payable at this point? The total credits.
8,200
82.
8,200.
And how did we get the 8,200?
because we made payments in cash after we purchased the office supplies and the remainder balance of the thing that we promised to pay.
The office equipment, the balance of the office equipment that's owed.
Okay. We're
But
getting warm, but
the note says that the office supplies were not recognized.
which note was that?
At the bottom, go scroll down.
On July 9th, they said a note that office supplies were recognized and recorded when they were purchased on July 5th are not a part of the July 9th transaction.
Aha. Interesting. Now, on July 5th is when we made the first transaction on credit, right?
Right.
Which was how much?
52.
And when did we make the next transaction on credit?
To 6.
July the 6th. For how much?
3,000.
3%.
Yeah, and that 3,000 was a part of another transaction, wasn't it?
Yes.
Yes.
Yeah,
So I'm walking you through it this way so that you could be thinking chronologically and logically, because this is part of what accounting is all about. It's all about analyzing things, remembering things, and keeping the facts together. So you come up with the correct outcome, hopefully 100% of the time. So we have 2 transactions on credit and they total 8,200, correct?
Correct.
And then now we have a transaction on July 9th of $2,600. So you paid a part of your bill, right?
Mhm.
So how much are you owing now after the bill is paid?
Is it 56?
5,600?
Yes. Okay. All right. So just keep that kind of stuff in mind. Next transaction, July 10th, Independence Day in the Bahamas. What happened?
We
perform
collected
a
some money.
service.
Cash
Yeah,
is collected for 2,800.
yeah, we actually got some money. Because remember, every time you perform a service, that doesn't mean you got money. Because if that was the case, I wouldn't have so many outstanding receivables now for services I provided. Because people like you to do stuff and then it's hard to collect money. True or false?
True.
Yeah. Okay. I do consulting and accounting and finance and all that stuff. And people always want you to do stuff, and when you say half down, they get a little uptight, like you need it up front. You don't believe I'm going to pay you something, and you're like, not really. That's just a normal practice. And some do it reluctantly, and others you allow them to not pay you 50% down. You said, okay, that's my friend, that's new business, that's my boy, my gal, whatever it is, and we just go ahead and do it with the promise that they'll pay.
It's the
Then when you're
coolest
done,
sport.
yeah, when you're done and everything is submitted and they get the work done, then all of a sudden you have a problem trying to get the money. Okay? So, but in this case, you got some cash. 20, how much was it?
2,800.
800.
28.
So how do we record this sale, this revenue transaction?
Our assets are going to go up by 2,800. So
Yeah,
that's
we
on
debit cash, 2,800, and what
uh,
else would go up?
credit.
Revenue will go up.
Credit go up.
Yeah, revenue would also go up by crediting design revenue account for how much?
2,800.
2,800.
Absolutely. Now, if it's beginning to look repetitive, that's good. That means you're actually involved in accounting. Accounting could seem quite repetitive as far as the principles are concerned, but the transactions change all the time and makes it interesting in terms of trying to assess what different transactions mean and how they should be recorded. But the debit and credit process and the posting thing is always the same. That's the beauty of the accounting profession. It is not based on your mood nor your opinion like other professions. Okay? Lawyers and economists and all that. They have all kind of off the wall stuff going on all the time. Accounting is not like that. We have a few off the wall things, but not too many. And certainly not journal entry transactions and postings. The process is the same every single time. All right. So we have revenue and cash, now we have revenue and credit. How much revenue is there on credit?
$9,600.
So you did $9,600 worth of work, but you got no money, correct?
Correct.
My.
Craziness.
But yeah, it is craziness. But we do it because we're hoping to generate that they will pay. See? That they will pay when they say they will pay in a week, 30 days, soon, right around the corner. We keep hoping they'll pay. Some people pay very well, and others
Don't.
suck. Okay? And that's why we have people in accounts department who make calls to clients who owe money. Mr. Jones, Mrs. Smith, you owe us money. How much is the balance? $14.37. You coming for stinking $14? Yes, ma'am. Well, I'll come in when I feel like it's only 14. You all break it, and so on. Could we have that
Attitude.
conversation?
So just like them.
Attitude.
Yes. And we shouldn't do that. If we owe it, it doesn't matter how much we owe. Owe is owe, isn't it? But Bahamians are a strange group of people. We have all kind of attitudes toward what we owe. But the funny thing about it is before the person give us credit, we like on our knees, please, God knows I'll do it. Just please give me the credit. Please, God. What kind of people you is? I wake in, I can pay you all or whatever. We come up with all kind of stuff to get it. And then once we get it, man, we come up with all kinds of stuff not to pay for some reason. All right. So you did some work for 9,600. You didn't get the money, so you debit accounts receivable. It is an asset account because you hope to get it. It is accounts receivable is a substitute account for cash. When you don't get cash, it becomes a receivable. It's an asset because you hope and pray you will still get it. That's why accounting records it that way. Accounting also records it that way so you can have a record of everybody who owes you money. Without that account, you wouldn't know who owe you money, correct?
Correct.
Absolutely. All right. That's the beauty of accounting. And what account do we credit?
Design revenue.
Yes. So we record it as revenue, even though we didn't get the money. It's still revenue. Doesn't change that fact. You can't say, I didn't get any money, so it's not a revenue transaction. It is a revenue transaction. You just didn't get any money because you agreed to wait. And you're agreeing to wait has nothing to do with the principle that it's revenue. Do you follow, folks?
Yes.
Absolutely. All right. Next transaction, revenue collected in advance. How much?
$1,400
What do you think in advance means?
before we did the work.
Say it again.
Before we did the work.
Yeah, you got paid before you did the work. Sounds like contractors in the Bahamas. They always want to get paid first.
Half down.
Yeah, or whatever it is for the particular procedure. And then they run off with the money and don't show up anymore. Come back weeks later or never. Then you have to try and run them down. That's why a lot of them want it up front. Because as long as it's up front, they can do whatever they feel like. But if they have to work first and then be paid, chances are you'll get the work done. Maybe, hopefully, prayerfully. Okay? But this in advance thing gets tricky. But somebody trusts you, so they give you the money in advance. Here's the $1,400. You have the money now to buy the supplies and do whatever you need to do in order to perform the service. So you debit cash, of course. And what account do we credit for this money in advance?
Liabilities, unearned design revenue.
Yeah, notice what it's called, unearned. Unearned means what?
We didn't do the work yet.
Uh-huh. We haven't done the work yet. Unearned. What's the opposite of unearned?
Earned.
Yep. Okay, folks? There's no secret weapon, no magic potion in all this. You either know or you don't know. That's why I have to go through the process. You can't fake it in accounting. You can't estimate. You either know or you don't. That's how it works. That's why you have to come in every week and learn this crap. Not crap, you know what I mean? But you'll find that it'll be beneficial to you later in one form or another. Okay? I did my first accounting class, I'm afraid to even say I feel like a bloody antique, many decades ago. And when I sat my first accounting class, like you guys, I'm like, what the hell is this? Why did I waste my money? And why am I suffering? Why don't I just go home and watch a movie? Now all of a sudden, decades later, here I am, I'm being able to impart this stuff, and I can't imagine all the other benefits. Okay, trying to encourage you guys. All right. So we credit unearned design revenue for work you haven't done yet. Next transaction, July 22nd.
We got some cash.
Yeah, we got some cash. Thank God. So we debit what we get, and what do we credit?
Credit accounts receivable.
Yes, so that account goes down by how much?
5,000.
Wonderful. Let me say again, if any of these things that I'm talking about, any aspect of these transactions and postings you don't understand, please raise a question. Get it cleared up while we're in these sessions.
Yeah.
You'll not only be helping yourself, you might be helping a colleague in the room. Okay? Whether or not they say so.
Mr. Wilkins.
I'm sorry, Mr. Sorry, go on.
Mm-hmm.
Oh, yeah, I had a question. I don't quite understand what is, I mean, I understand, but I'm just trying to figure out the difference between revenue on credit and revenue collected in advance. I'm just trying to, why would that be considered a liability, the unearned design revenue?
That is a liability because you have collected the money, but you have not performed the service. So you owe the service.
Okay, okay,
Yes.
all right.
All right, good question. A lot of students get stuck on that. They don't understand why it's recorded as a liability in the balance sheet. And simply because you owe the service. You got the money, but you have not performed yet. Correct?
Yes,
So therefore you owe the service. Does that help?
yes, yeah.
Okay.
So I have a question.
Yes.
So once we post that to it's unearned revenue, right?
Yes.
So once the revenue is then earned, do we then do another journal entry for that?
Yes, but only when another transaction occurs. You follow?
For
This
example,
transaction says we collected money in advance for work we haven't done. So we make the entry for that to unearned revenue. We don't do anything else until something else happens.
so that would be the entry. Let's say that's the entry for the money hitting my bank account, right?
You mean the $1,400 in cash?
Yeah, that's the money hitting my bank account, and then if you adjust it in the journal ledger, right?
Yes.
So what would be the other journal entry for that to move it out of unearned revenue?
I know you're anxious to move it, and that's good. Hold that thought. We will move it when the time comes to move it. For now, all you do is record the unearned revenue as it is here. Do you follow that?
So, Mr. Wilkinson,
Yeah.
okay, no, like you say, you have to read. That 1,400 was actually a deposit. That
Yeah.
fee, that advance fee.
Yeah, it was a deposit.
But how would it have worked if it wasn't a deposit and the client paid the full amount?
Well,
I mean, I know you would do it the same way, but
well, yeah, that's a good point. A deposit, and you mean the full amount of 1,400?
yeah, because this 1,400 was actually an advance fee as a deposit.
Right.
But what would have happened if the client, say the client bill was $1,400 and they just wanted to pay you up front, but the work was not completed?
We still debit cash, and we still credit unearned revenue.
Okay.
You follow?
Yes.
Yes, absolutely.
Okay.
See, as long as you haven't performed the service, but you got money, no matter what you call it, once you get money, you have to debit cash and credit unearned revenue. Okay?
Mr. Wilkinson, I have a question, please. With the 1,400, I know that you said that we would create a key account for the unearned revenue
Right.
because this was paid in advance. Isn't the prepaid account is things that are paying that we are paying in advance, like money we expecting as well? So why wouldn't we have this in a prepaid account?
Correct. The prepayment represents your purchase of an asset, which is insurance. Do you follow that? You are purchasing the asset, so it's an asset for you. In this case, you're not purchasing an asset. Somebody's giving you their money, so you owe them. When you purchase insurance in advance, the insurance company owes you 2 months of insurance because that's what you purchase. But in this case, when somebody gives you their money in advance as a deposit or otherwise, now you owe them the service. You follow the difference?
Yes,
Yes.
I
Good
gotcha.
question. Good question. Because a lot of students get stuck on that. Even people in practice who work in companies, depending on their level of training, they may not get that. Or even after their supervisors tell them, you know what, just write the entry that I tell you. And they still don't understand why the hell they do it. They're just going through the motions because they didn't do stuff like this. They don't have an accounting class under their belt. And so they're doing stuff, but they don't know why they're doing it. Their supervisor knows why, the accountant knows why, the CPA knows why, the student with a bachelor's degree in accounting knows why. You guys who've done accounting classes know why. But a lot of people work in companies recording stuff, they don't know why. They're just doing it because somebody told them to do it that way. But now you have a little idea of what the hell's going on and why it happens that way. So that puts you ahead of a lot of people, believe it or not. All right, next transaction, collect some money. You said we got some money, 5,000. You saw the transaction, the cash account is growing again, money coming in. We're always excited when money's coming in. Receivables are good, but they're not exciting until they turn into what?
Cash.
Absolutely. Way to go. All right, paid an expense for 4,800. What's the entry? What expense did you pay?
We paid employees.
Yeah, you paid salaries. We all know about that. So we debit and the wages expense, so salaries expense, and what do we credit?
Cash.
Nice
Cash.
clean entry, right? Doesn't get easier than that. Expenses are always what?
Easy.
Yeah. What expenses are always what? Debited or credited?
Credit.
Uh-uh.
Debit.
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 Remember the rules? Remember that rule I said take a shower while you're doing it? Sing a song, whatever you need to do. You have to make sure you practice that, otherwise you're gonna slip up every now and then. Losses are always what?
Credit.
Uh-uh.
Loss is always
Debit.
debit.
Yes. Revenue is always what?
Credit.
That's
Credit.
Credit. Liabilities are always what?
Credits.
Credit.
Capital is always what?
Credits.
credit.
Okay. Can't say I didn't tell you. There's no in between. You either know it or you don't. With some people they can just learn it and remember. Others it comes with time and practice. Whatever works for you is fine, as long as it works. Okay.
So Wilkinson, can you repeat that, please?
What aspect? You mean what's debit? What's
You were
credited?
given a little something to remember how to post.
You mean the
Losses,
debit and credits?
losses, yes.
Oh, my little recital.
Yeah, your recital.
I remember that. Okay. Assets are always debited.
Okay.
Losses are always debited.
Okay.
Credit, liabilities are always credited.
And capital is always credited. Okay.
Absolutely.
Okay.
Absolutely. Okay. Rules of the game. Okay. All right. Expense to be paid later. Can you have an expense that you'll pay later?
Yes.
We do that all the time in the Bahamas, right? We get bills all the time. We say, man, I'm paying that bill. I go and have a COVID test, go to Miami, I need to travel. The hell with that bill.
Well, I always pay my bills.
You're an exception to the rule. Sorry, I'm just teasing. Hopefully that's not the case. We should pay our bills first and then have fun after. Some people have fun first, and then they say, well, I'll see how to pay the bill later. All right, so this is an unpaid bill. For how much?
$680.
Yeah. So what do we debit?
Expense.
Utility expense.
Utilities expense. Remember, there are certain names that we use in accounting, like utilities, unearned revenue. You need to learn those names because they are the love language of accounting. Okay, we could use another name like, BPL expense, but we don't want a BPL expense because then tomorrow it might be BEC expense. Somebody see, accounting has to be consistent. So instead of calling it something like that, we say we have a name for these things, utilities. Now, if you want to say utilities expense dash BPL, fine. Utilities expense dash water and sewage, fine. Utilities expense dash BTC, fine. You can do that. If in your organization, if you want to break it down, no problem. But the fundamental thing remains the same. We debit utilities expense, and what do we credit?
Accounts payable.
Payable.
Why payable instead of cash?
Because we owe it.
That's a bill we
It's
owe.
your own.
Yeah, we owe. We bloody owe. Absolutely. All right. What about the next transaction? The owner withdraws some money. Remember, a withdrawal is money taken out of the company directly by the owner. Like the owner says, my salary isn't enough this week. I need some money to go to Vegas to gamble. So they just go into the bank account and withdraw. And they say, since it's my investment I put in, I could take out some of the investment. So when we take out directly from the company, it's not an expense. It's called a withdrawal. Okay, folks? Does everybody get that?
Yeah.
Yes.
Sounds skeptical. Let me put it this way. Whenever you're paying a bill, that helps you to generate revenue for the company, we call it an expense. Whenever we're just taking money out as the owner, we call it a withdrawal. That's the rule. How's that?
Makes sense.
Yeah. Because if we set it up as a rule, then you don't have to think about it any other way. Like try
It's
to be
less, you
philosophical.
don't feel as guilty when you put it underneath expense.
It's the same offense though. You shouldn't take it out. But accountants have a way of showing the difference. See? So if you take out money to pay a bill for generating revenue, like light bill, water bill, phone bill, whatever, then we call it an expense. That's how accountants classify it. But once we get a check or a document showing that you just took it out for your personal use, we don't call that an expense. We call that a withdrawal directly from the company. Okay? All right, just in case some of you run into that later on when you change professions and become bookkeepers or accountants. All right. So how much did the owner take out?
$2,800.
And as a result, we debit which account?
Capital account.
Yeah, the same one we credited at the beginning when they made the investment, right?
Right.
So when you make an investment, we credit capital to show that you put money in. When you withdraw, we debit that same account to show that you took money.
Out.
Yeah, as the owner. And since people say, this is my business, don't tell me what to do, Mr. Accountant. Don't advise me not to take money out of my own business. I need to change your way. And accountant is trying to tell me what to can do. Okay, like that. But doesn't matter what the owners say, you still have to record it as a withdrawal. If they don't like it and they fire you, then they fire you because your accounting principles say that's how you do it. Some owners might tell you put it on an expense so nobody know I take it out, except me and you. And then you say, well, I'm sorry, I can't. My accounting principles tell me that I need to put it in a special account called. Okay. You could go ahead with your boss, and do the wrong thing, but that would not be the correct thing to do. How's that? They fire me if I don't do this, please. Then you have to choose between your morality and ethics and your job. Okay. Can't say I didn't tell you. Notice the ethics part of it is not necessarily a part of the discussion, but it is part of the reality. All right. Notice how it's posted. The cash account is credited as usual, and which account is debited?
Withdrawal.
Yes. So now that we've done all the standard transactions, uh, the exhibit that follows gives you a complete picture of all the general ledger accounts, all the transactions that went through, and the current balances in each account. Does everybody see that? Or I'm the only one who's looking at that?
Yes,
Yeah.
we can see it.
Yeah.
Yes.
Sincerely hope that you looked at it, because this is the kind of thing you look at and say, I know that. I just did it. Maybe you just did it, but you still have to look at it as the big picture. And all of this before you is what we call the general ledger, where all the individual accounts are listed for the company. Some companies have 10, hundreds, thousands, millions. Hopefully not millions, but many, depending on the size of the company.
Okay.
Please familiarize yourself with this general ledger. Please know that this is what a general ledger looks like. Please know that in the general ledger lies the individual accounts. Please know that the individual accounts is where all the journal entries are posted. But it's okay if you don't, because the homework assignment I'm going to give you is going to force you to know. Sorry, I just
This general ledger is very
Right.
clean compared to some I've seen.
Aha, now we're getting warm.
Clubs. I've heard that they're links. Where do you find those? Okay, so case in point.
So good. Okay. So yes, who made that point? But it looks cleaner than many.
That was me,
Who's me?
Ashley.
Oh yeah, Ashley. Okay, very good observation, Ashley, because it is very true. Not all or many, there are many GLs that look nothing near as clean as this, for one reason or another. Hopefully, though, at the end of the day, it is as accurate as this. Do you follow? Because sometimes we have reversal and just things going back and forth, and it's a little messy. But
Yeah.
hopefully at the end
No,
of the day, it's as accurate as this one is. All right. So please take note of it. Note what is what the debits are, what the balances are. Notice at the end, the accounting equation, is it in balance? Is the accounting equation at the end of the general ledger in balance?
the balance.
Yes,
Balance.
yes.
Yes. So for all intents and purposes, the transactions have been journalized and posted correctly.
Correct.
What are the total assets in this general ledger?
51,800.
51,800.
Owner's equity?
44,100. 120.
20.
Did equity go up or down after these transactions?
Equity went up.
Sorry?
It went up. We started with
Went
48.
up. We started with
Aha.
40.
Aha, we started with 40. How do you know we started with 40?
Capital was
The original
capital was
investment?
40.
Yeah, the
Capital
original
was 40,000.
investment, 40,000. How much did it increase by?
4,000.
4,120.
Which means that somewhere along the way, this company made some profits, yes? Because the only way you can increase equity is by putting in more money or making profits. All right. What are the total liabilities?
7,680.
Did we start off with any liabilities?
No, well, after we opened, yeah.
No, did we start with any?
No, we didn't.
No.
Absolutely. But by the end of the day, we ended up with 7,680 in liabilities. Now, remember, folks, liabilities are not bad as long as you're getting assets that generate revenue to make money. Liabilities become a problem when they get too high and you can no longer afford to pay them. Do you follow? So just like your personal life, if you borrow reasonably, stuff that you could pay back that makes sense, then it's okay. But if you're borrowing and borrowing and borrowing, especially for stuff that will not generate any return, then sooner or later you're going to be over borrowed and start to suffer the consequences. And if you're not borrowing to purchase assets to help you, maybe to convert the assets and pay off the debt if you get in trouble, then sooner or later you're going to start choking. Okay? And then if you're married, then you're going to get on your spouse's nerve, and then you're going to start punishing your children unnecessarily because you have too much debt. You can't pay them back. And you're going to ask your husband, what kind of man are you? I don't care if I over borrowed, and I don't care if you told me not to. I still need you to clear this up, or else I'm not speaking to you. Or vice versa. I'm being the devil's advocate again. Okay. But I'm making a very important point. Back in the day, I used to be a loan officer, loan manager at Scotiabank many, many decades ago. And so this is an example of stuff that I've seen in real life where these things actually happen. Spouses come in to borrow on their own. They don't tell the other one what they're doing. They get overcommitted in debt, and then they can no longer pay. And suddenly the person call the house. The other spouse picks up and say, "What the hell is that person, my wife or husband, doing with that loan? I know nothing about it. I didn't sign on it, so definitely I'm not paying anything." And so now we have another situation. These things are not uncommon. Okay. So now that we have our nice clean general ledger that is in balance, we can do a trial balance. Everybody see this trial balance?
Yes.
Yeah. What's the total of the trial balance, debits and credits?
$60,000.
$60,000.
Yeah. Where did all those debits and credits in the trial balance come from? From the what account?
From the general ledger.
Yeah, they are general ledger balances that we just saw earlier. You just pick up the balance. That's why we do a trial balance. You pick up the balance of each account, put it in the debit column, the credit column, and they should balance. If they don't balance, if you go back to those journal entries to see what happened. And if the journal entries are right, you have to go back to the posting to see if you posted wrong somewhere, because somewhere between the journal entry and the postings, you made a mistake. And depending on the amount involved, you need to find the error. And finding the error is not like getting vexed and saying, man, I feel like doing that. You have to find it. Work late. Call the housekeeper until you find it. Kind of thing.
Mr. Wilkinson, I just wanna just you can correct me if I'm wrong. So the journal entry, another name is cash flow accounts.
The journal entry?
Yes, it's just another name as cash flow accounts.
Good question. The answer to that is no. Cash flow
Okay.
accounts and the journal entry are not the same, and that's a good point to make, as some students think so. Okay, the journal entry is only for recording transactions. Okay, the cash flow account, depending on what you're discussing, is either a specific account in accounting called the cash flow statement, which we'll see later on, or in some cases, the cash account is referred to as the cash flow account of money coming into the account, cash account, and money going out, but not the journal entry. The journal entry is simply for recording each and every transaction, so we can have a record in accounting of every single thing that took place in the company on a transaction basis. Remember, accountants only deal in transactions. We don't deal in orders. We don't deal in promises. We don't deal in maybes. We don't deal in it ain't happened yet, but recorded anyway. We don't deal in that stuff. We deal in when things happen. It happened, good. Bring me the document. It's going to happen, good. Bring me the document when it happens. I swear it's soon right around the corner, good. As soon as it happens, bring me the document. Nothing is recorded in the journal entry until then. Just a little rule in case you come under pressure by bosses and supervisors and ting them down. Okay? Now, under the trial balance is some narrative about how we do it. We already know how we do it, but you still need to read it, because you might say, well, I know how to do a trial balance. I'm not reading that stuff. Bunch of no time, I'm tired. Maybe, but still read it. Okay? Read the focus on business practice that's in your text. Read all that crap. He said, man, you think I have nothing else to do? No, I know there are other things to do. But I know also that if you don't read it during this semester, you may never get to that good stuff ever again. Miss something good. Okay. Finding trial balance errors. Anybody read that?
Yes.
Great. So you know that you can make errors in the trial balance, and where a debit is entered as a credit entered as a debit, that'll create an error. You have to find it. All right. You added the debits and credits wrong. Don't forget, unless it's a computer, you can add it up incorrectly, make a mistake. Go back and check. All right. An error is made in carrying balances. You might see 3,296 and carry 3,926. Happens. Okay. So don't think you're infallible unless it's a computer, and sometimes it happens there too. But mostly computers tend to be correct, and some are and summing and so on. But if people are doing it, we're always prone to error for whatever reason. Okay? Also, there are two other unique types of errors that can occur in the trial balance. The first one, when we record an account as a credit when it actually carries a debit balance. So if it's cash, which is normally a debit balance, is recorded as a credit balance, that mistake can easily be found if you find it. Whatever the difference is on the trial balance is normally divided by 2 if it's that kind of error. It may not be, but if it is. So if you have a cash balance that's normally a debit recorded as a credit, and the difference, whatever the difference is, then that should be easily divided by 2. Okay. The other type of unique error that may occur in the trial balance is when numbers are transposed. Okay. For example, if 23,459 is recorded as 23,549, this is a transposition error. Causes the trial balance to be out of balance. Usually the difference that comes up is divisible by 9. This is just something that we found out forever ago. Okay. So you have your normal errors of adding incorrectly, debits being recorded as credits, and then we have these two unique types of errors that if whatever the difference is in your trial balance when you add it up, If it's divided by 2, then chances are you have the debit or credit on the wrong side. If it's divided by 9, the error, then it's probably a transposition error, and you need to go back and find out what you transposed or recorded incorrectly. Okay? So again, these things are very important to look at. All right. Stop and apply, man. Sometimes they could be a little boring, but you should stop and apply. Like, look at them. You don't have to spend the whole night. 5 minutes. Stop and apply gives you the answers, so that you could just immerse yourself like a foreign language. Okay. Best way to learn a foreign language is to be in the environment and hear people say it every day. Sooner or later, after a while, you just start saying crap, even though you start off clumsy.
Wilkinson,
Yes.
you know, this cleared my mind. I had my past accounting experience, and it's now just for the first time, it's now synced in.
I am
I
not
had to rid myself of my past experience that blinded me from all of this.
absolutely, and
It's now sinking in.
I thank you for sharing that, because that is absolutely crucial. Okay. I don't know some, well, I shouldn't say I don't know. I do know. But unfortunately, a lot of people's experiences, whether in the real world or academia, with these kinds of things, leaves them more handicapped than when they sometimes went in. People on their jobs doing things a certain way, and now you come into a session like this, say, "What the hell? That doesn't conform to what I've been saying or doing." And this is a very common problem, even in day-to-day experiences at work, wherever we are. Okay, so yeah, uh, that's a very good point that you made. And so now you have to rewire and then charge off with the understood stuff. Okay, that's really the beauty of kind of getting this stuff the correct way. Let me put it that way. I know this to be true. When I was an accounting student, like I said, forever ago, man, I'd be sitting in class and thinking, can't they make this simpler so that I understand what the hell is going on? But all too often, it had this sophisticated academia thing. Be like, man, what the hell was that? Okay, and that is unfortunate, and oftentimes unnecessary, especially when you're doing the fundamentals, because then you lose sight of things too early in the game. All that other big time heavyweight stuff, you can mess with that later. But at this stage of the game, it's very important to understand clearly. So thank you for making that point. Absolutely. All right. Somebody mentioned the difference between the journal entry and cash flows. This next part, if you haven't read it, please read it. It'll tell you a little bit about cash flows with regards to transactions. And really, it's only about when money is going into the account, when money is coming out of the account, and how organizations and companies need to make sure that when you're receiving and spending money, you know what the hell's going on. This applies even to your personal life. You can't continue to spend the hell out of everything without knowing where money's coming from. Okay? Only two people in my life I know does that. My wife and my baby. But he's 23 now in college, but as far as he's concerned, he only needs. He doesn't care where I get the money from. He doesn't know and doesn't, is that I need. And the only other person who does that is my wife. She says, I need, we need, I need, I need, we need, I need, I need, and I need. But nobody ever asked me like, Dad, sweetheart, how are you making, where are you getting this money from? They just assume that I just conjure it up from somewhere, I think, like out of the blue, some magic potion, because they've been so used to when they need it, it's available. Companies are like that. Some people, when in companies, when they're spending, some bosses even, owners, they only keep grabbing. They don't stop to think like, am I over grabbing? Am I withdrawing too much from this bloody company? Will that soon result in this company not having enough money even to pay salaries? I need to stop this Vegas thing or whatever it is we're doing. This drug habit has got to stop. Having 5 chicks has got to stop. This thing is breaking me and my company. I need to stop. This addiction needs to, whatever the hell it is. Because this cash flow thing is about what's coming in and what's going out. And if you're not watching it, sooner or later, you're gonna end up somewhere you don't want to be. Whether it's a business or whether it's even your personal affairs. All right. Does that mean you should stop buying and selling? Of course not. Just watch stuff. Okay? Make sure you don't spend more than you receive at the wrong time for the wrong thing. See, like that. Companies do that all the time as well. Okay? All right. Then we have 2.3. Please look at that. It's just showing the connections between somebody's moving paper stuff. Is it just me? Okay.
What page we on?
Yeah, what page are we on? Where the hell are we anyway?
64. 64. We get rid of that.
I like that. Jeez, man, whatever your problems are, all I want to know what page we on. That's funny. All right. So right under those, right under the discussion about cash flow, somewhere we have these diagrams again. We saw them already. Please look at those arrows, see how they connect. All of this is part of the deal. Focus on business. Read that stuff. Stop and apply. Read it. Look at it. Don't say, man, I know that. Now, if you really know it and you don't have to read it, like you know it, fine. Ignore it. But other than that, at least look at it. And if you looking at it and you like, okay, I get that, then move on. But if you're looking at it like, man, I haven't really gotten that yet, I need to look at this again. Stop and apply. That's why stop and apply is there, for you to stop and apply the stuff that you just read previously. That name is not an accident. The more you stop and apply, the better you'll understand. The less you stop and apply, the less you'll understand. Or remember. Notice I didn't say you won't remember anything, but you just remember less. And when it's time to do homework, oh, I say, man, I gotta go back and look at that again. Then when test time, I say, man, I should have stopped and applied more. Okay. All right. For anybody who read chart of accounts, what is a chart of accounts in accounting? What is it? Say, man, I haven't read that. I saw that, but I just skip over that. Anybody? What a chart of accounts? It's a simple thing. Only if you know, though. Only if you read. Reading is hell, isn't it?
Is a table of contents for the ledger.
Yes, it's a table of contents for the ledger. Which ledger? What's the full name of the ledger?
General ledger.
General. Because remember, if we just say ledger, what are we saying technically? One account, correct?
Okay.
But if we say general ledger, we mean what?
Number of accounts.
All of the accounts. But sometimes, depending on the environment we're in, for example, we can say ledger, and because we're in a certain environment, everybody knows we mean general ledger, correct? But if everybody does not know what we mean, we have to say what? General ledger. Okay? Same as if you go in certain environments and you say gamma, nobody knows what you mean. You go in other environments, say gamma, everybody knows what you mean. What does gamma mean?
Give me.
Yes. That's funny. But there are a lot of young Bahamians who don't know what gamma means because they've never even been exposed to gamma. Gamma that thing. Boy. Okay. My. So the chart of accounts is the table of contents for the general ledger. And we all know what a table of contents are. We pick up any textbook, including a textbook, there's a table of contents which outlines what's in the text. What is it? Did we see the general before? I hope so. Did we?
Yes.
Okay. So I'm not wasting, not wasting. You have to read all that on journal, even though we saw it. Read it still. I know we did a bunch of general journals when we did those transactions, so we know what they are, but still read it. Okay?
Mr. Wilkinson, what you are showing now, that's in chapter 2?
Maybe not in your text. Is it in your
Oh, okay.
Yeah, it's in chapter 2 in my text. Is it in your text?
Because I didn't.
Not in chapter 2.
Oh, you haven't done chapter 2?
It's not in chapter 2 of our
No,
text.
it's not in chapter 2. That's why I was trying to figure out.
Okay, yeah, it's not in chapter 2 in this form. That's why I presented to you in this form.
Oh, okay.
But when we look at it, you'll see it is in chapter 2 in another form, for example, or maybe from chapter 1 in this form. For example, this figure that you're looking at is how we analyze and process transactions. Have we done that?
Yes.
Yes. So that's in chapter 2. We just did that, correct? Just not in this format.
Yes, yes.
Yes. So it's like the difference between 6 and half a dozen. Now notice step 1. Step 1 is showing you where the transaction originates, correct? The sales invoice.
Yes.
Okay. Then step 2 tells us what?
Record the entry.
Yeah.
Check page 46.
What is sick? In which chapter?
This is chapter
2.
Chapter
Yes.
2. Chapter 2.
So it is a 2, just on another
Yeah, I
page.
read it earlier. Okay.
Okay. Most of this is in your text. It just might be on another page because they're trying to like another edition.
Yeah, this was
Yeah. So step 2 is recording the entry, which we just did. Notice how it's recorded. Please note the details, date, description, narrative at the bottom. We talked about all those already. Debit and credit. And then step 3, posting. We did a posting for every single transaction we did earlier, correct?
Yes.
And step 4 is the what?
Preparing the balance, trial balance.
Yeah, and we've done all of them. This is just a pictorial view. So those of you who are pictorial as opposed to narrative.
It's simpler.
Yeah, but you still have to read crap though. You have to read though.
Yeah.
Never mind this picture.
Yes.
I know a picture paints 1,000 words, but words paint even more. How's that? I know. I made it a little dramatic so you could remember. Because what you don't make dramatic these days, nobody remembers. So to hell with that. I don't care what he says. I'm not clicking, reading that. Don't do that. All right. So there's an example of your chart of accounts. You have the account numbers, the account names, and a description. And every business should have it, but not every business does. Most medium and large companies have chart of accounts. Small business people, they don't even think they need any accounting at all. All they want to do is sell stuff and put the money in the bank and yuck it out. Sell stuff, put money in the bank, yuck it out. Man, I don't need to pay no accountant for no account. I know it in the bank. Need no accountant. I'm the accountant. If I open this business, I do everything. All right, which is not a good idea because eventually it suffers and many times it fails and certainly doesn't do as well as it should if it's being done correctly. Okay? I had a client call me not too long ago, last week sometimes, and she says, help, I'm stuck. And of course, when I meet with her, she says, my accounts are not out of order. The bank needs accounts for me to open certain business accounts. My doggone filings are behind. I don't know what else I need to do. I'm not even sure if I should apply for that or not. I don't know. I thought I knew, but everything's backing up. I need you to do something, but I need you to do it cheaply. I said, okay, you need to do it cheaply. But the point I'm making is small businesses especially do not have these kinds of things, and they should have them. because this is how you keep order. And nobody thinks of the importance of them until things start to suffer, and then they call an accountant from somewhere and then ask you to wave your magic wand to fix everything and then do it cheaply. Please don't charge me too much. I'll pay my doctor too much though. I'll pay my lawyer too much. But I don't pay you, stinky accountant, too much. Just don't get me mad and hurry up. I need this fixed. All
For
right?
those trying to follow along, our chart of accounts is on page 43.
Yes. Okay? As you can see, it's very simple. And notice the assets start with the 100s. The liabilities begin with what?
200,
200. Yeah. And equity begins with
300,
300,
revenue,
400,
expenses.
500.
500.
So if you see 300 and anything, you know what type of account is that?
Liability.
Yeah.
Capital.
Capital account. 400 anything,
revenue,
Revenue,
500 and anything,
expense,
expense,
100 and anything.
cash,
Isn't it
Asset.
beautiful once you follow
asset.
through? Yeah. See that? So it takes away any doubt, any ambiguity, any all that stuff, keeps things clean. Just like that general ledger we saw. But if you don't have that stuff, things are going to be messy because nobody knows what the hell is going on. Only what's in the bank. And some small business don't even know what's in the bank because they don't do bank reconciliations. They think they don't need it. Man, I don't need no reconciliation. My bank ain't even for me. Whatever I put in, I take out. I can reconciliation, paying you accountants again. All y'all want is money. Until something goes wrong. And then they wake you up in the middle of the night and say, please do some magic. Fix everything. Make it good again, and I'll pay you. Set up a receivable, and I'll pay you when I feel like it, now that I'm fixed. All right. We talked about the general ledger. You've seen the general ledger. This is another example of the general ledger. Notice, did anybody see the posting reference in the general ledger when you were studying accounting last week? For those of you who studied accounting last week. If you're not studying accounting every week until the semester is over, your life is going to be a little more difficult than it needs to be. Keep studying, keep reading, keep practicing. Grab stuff at the end of the chapter, grab a question, practice it. Don't wait for me to give you homework. Grab those basic stuff and do it just to flex your muscles. Now, I'm giving homework or assignment just to kind of quote unquote force you to practice. But like Kobe and Michael, don't be forced. Even if I don't give assignments, still do a little crap here and there, practice stuff. Like go out and shoot some hoops, some accounting hoops. How's that? So in this general ledger, the posting reference, anybody saw that? I'm the only one who saw that?
No, it's right there.
Okay. Are there any questions on why it's there? Because if you're anything like me, I'd be curious, like posting reference J1, what the hell is that?
Well, according to the note, it's the page in which we could find the actual transaction that we record.
Kiss my foot. I was hoping somebody would say that. According to the notes, see? It is the page on which you can find that transaction in the general journal itself. So for the first 3 transactions, they're on what page of the journal?
J1.
Page 1, journal 1, journal page 1. And where's the 680 transaction on the 30th?
Page 2.
Yes. My. That supports my case that reading is the key as well. Never mind what I say is important because attending sessions are important too. But equally important, reading. Posting, we saw posting earlier, we killed it to the bone, but still read all the steps. You're like, man, I have to read all those steps? Yes, you do. Because all those steps are going to be exactly what we did, but still read it because it really does give you insight for sure and for future on how this thing works. Just like Owen says, like, man, this is a whole new world. What the hell was going on before? And reading will help you to see that tremendously. Okay. All right, these are all examples of general journals, posting ledgers. We've all seen them all before. We're just showing them together, one after the other. Does this journal have a, what pages are we looking at for this journal, general journal? What page is this?
This is on page 60 for us.
Oh, I'm sorry. Okay, and on page 60, what journal entry page are we looking at? What's the J page number? What's the J page number on what I'm showing you?
Page 2.
Yes, page 2, top right-hand corner. What's the posting reference in this general journal?
512.
512. And where can that account number be found?
That would be expenses.
Which expense?
Utility expense.
Correct. 500s in the chart of accounts refers to all what?
Expenses.
My. The defense rests its case. You see how it's all connected, folks? But it only becomes second nature if you keep practicing it, if you immerse yourself in it. Okay? You cannot have a casual relationship because we all know casual relationships suck. There's no substance to casual relationships. Accounting is like that. If you deal with accounting casually, it will deal with you casually. You will not retain what's important. But if you get a little intimate with it and immerse yourself a bit, you'll discover that you will retain quite a bit of stuff that could very well be very helpful for you well into the future. I dare say a word to the wise is sufficient. All right, please turn to chapter 3. I'm scrolling down. Please don't let me end this lecture without giving you assignments, because then that means I'll have to type it to you, and I'd rather not do that. Okay, chapter 3. By the way, all these things that I'm passing as I'm scrolling, these are all practice questions, by the way. You don't have to choose the most difficult ones, but you can choose some of the exercises, for example, on your own, or you could choose a big time problem and go for it. Don't let all the numbers and words scare you. See, like this one, a bunch of journal transactions. Don't let that spook you. Just start with the transaction number 1, February 2nd, paid this month's rent, 400. Please, somebody give me the journal entry for that. Paid rent for 400. What's the journal entry?
Rent expense $400 and cash $400.
Simple as that. So don't panic like, man, that's a whole bunch of transactions in February. If you do that, you won't do it. I'm tired. I'm going to the theater. It's open now again. You can't mess with my stinky accounting or whatever it is. My gal coming to pick me up. I gotta go. Whatever it is, don't do that. Tell them. You'll see them at the end of the semester. Sorry. I'm just being the devil's advocate, trying to encourage you to immerse yourself. My thing is, if you're going to spend the time and resources to mess with this, you might as well do it completely until it's done. The only person who will benefit greatest, is you. I know, sound a little philosophical. What the hell? All right, what about transaction on February 10th? What is that? Bill customers who have not yet paid for this month's service. You send a bill, they haven't paid. What's the journal entry?
Accounts receivable, debit for $700.
Okay.
And the revenue account.
And the revenue account, yes. Whatever we call it earlier, that's the revenue account. We name it that. Okay. Thank you very much. Very good. This stuff is actually working. All right. Paid part-time assistance for services. What's the journal entry?
Debit wages.
Yes, expense. You have to say the whole thing because the more you say it, the more you remember. I know it stinks. I know what you mean by wages, and I know what you mean by debit wages. I do, really. I promise you I do. But for you guys, you have to say the whole thing until you get sick of it. Then you can say debit wages. Okay. Are we finished? Are we following the double
No.
entry system here? That's a single entry, debit wages, and
Credit cash account.
Credit cash.
Credit cash account.
why do we credit cash?
But you paid it out.
Because it's paid it
Yeah,
out.
we
Money to be
paid
paid
cash
out.
out. Okay. And then finally, on February 28th, made a cash withdrawal of 200. Aha. What's the journal entry?
Credit withdrawal 200.
Credit withdrawal?
No, debit
Oh,
withdrawal.
Debit withdrawal. Debit withdrawal.
Of
Sorry,
credit
200.
cash.
Debit
Credit cash.
withdrawal, credit cash. Since it's $200, that's not too bad. Obviously, the owner really ran short for some reason, correct? Say, mother's sick, it's a holiday weekend, I need some money. And I already paid my bills with my salary. So I need an extra 200 for this weekend. How's that? So they just grab 200. But when they grab 200, hopefully they tell you, the book, the accountant, so you could record it. Sometimes they grab and don't tell you. So it never gets recorded. Do you follow, folks? Do you follow that?
Yes. Yes.
So one day when you become an entrepreneur, don't be one of them. You might be because we get excited because it's our money and our business, so we just yuck and don't say anything. I don't have to report to any accountant. Their job is to find out I took it somehow, which is wrong. If you take a 200, you have to prepare a voucher, give it to the accountant, says you withdrew 200. Do you follow, folks? And it's the accountant's job to tell the owner who might not know because they don't know anything about anything in this regard. So you have to tell them as the accountant, Mr. Smith, Miss Jones, whenever you take money out of the company, you have to sign off on this voucher. I said, man, look here, man, this is not for my own money. I don't report to no one for my own money. It's my business. You have to say, well, I know, sir, ma'am, but this is an accounting requirement. Otherwise, your business could suffer down the road in terms of the reporting information. But anyway, I see, I hope I remember, man. All right. Most times they remember, they just don't want to tell you. All right. Just a little introduction to the real world in case you get that one day. Because trust me, in terms of accounting, there's a world where you work and then there's the real world somewhere else. It's nothing like the work you do from day to day. Absolutely nothing. It's a whole different animal. All right, chapter 3. How do we measure business income? Well, I hope you guys read little itsy bitsy things like learning objectives. Do you read that?
yes, I do.
That's good. Because some people just look at that and say, well, I'll see when I get into the reading. They're not reading that. Because they're not excited about reading that anyway. It's just, man, do I have to read that too? The answer is yes. It's a good idea. All right. Now, can you guys see this making a statement on the left-hand side of my chart?
Yes, we can.
Yes.
Yes.
Is that in your text?
I think it's at the front of the book.
Okay. The reason why I like this thing at the moment is because then we get to find out, like, okay, you had to have read it to know if it's there, or at least looked at it in a cursory way. Say, oh yeah, it's somewhere. And then if you really read it, then you say it with authority, yes, it's here, and it's on page 73. Sorry, I'm just rubbing in for the non-readers who are still procrastinating. Please don't procrastinate. Read, read, read. Okay. So this making a statement then is looking at the income statement. Which other statement are we looking at here?
Statement of owner's equity
And,
in the balance sheet.
and,
Cash flow statement.
which is a new statement that we haven't talked about in any great detail, but so Remember our initial discussion at the beginning was there are three basic statements: income, balance sheet, and owner's equity. Now we have a fourth and very important one, which is the statement of cash flows, which goes back to somebody's question earlier. Is the journal entry stuff the same as the cash flow? And I said, no, there's another statement. And this is the other statement. The fourth, and sometimes perhaps equally as important as any of the other statements. And occasionally, especially when the company is suffering from cash flow problems, this then becomes the champion of all statements, the statement of cash flow. Okay. So if you haven't yet taken a look at it, please look at where the arrows go. Okay. And you'll see how these things connect. But basically, you should know already that in the income statement, revenues minus expenses equal net income. Is everybody clear on that?
Yeah.
Okay. Do companies always make net income? Is it always net income?
No, sometimes it's net loss.
Sometimes you have net losses too. Many times. How do you end up with a loss?
More money going on that When your expenses exceed your revenue.
Absolutely. In your own personal household, when you end up in a deficit.
When you spend more than you earn.
Need I say more? So this accounting is not just for people who own businesses, for you, in case you haven't realized it yet. Okay? If you sit down sometime this semester and do a balance sheet, you might be surprised at what you come up with. You put all your assets down on the left-hand side, what you owe on the right-hand side, and what you own, the equity. You might say, kiss my foot, I'm sorry I did this class. I'm even sorry you said that. Or, oh, so that's my current position. You can also do an income statement for yourself for the month. Record all your salary that you make. If you made any other money from selling the Tribune or whatever, add that in. And whatever expenses you paid for the month, take that out, and then you see whether you made a profit or loss for that month. Surplus or deficit. You might be shocked. Think, mother sick, why did this cost? Now it's showing me crap I don't want to see. And that's what accounting is like. Sometimes it shows business stuff they don't want to see sometimes. All right. So you have your income statement. Notice the structure of the statement of owner's equity begins with the what? Beginning equity, correct?
Correct.
Plus
The net income minus
minus equal
withdrawal,
Minus withdrawal.
ending balance.
Okay. So folks, once you start understanding the structure, then you just put stuff where they need to go, correct?
Pretty much.
Yeah. So I encourage you to see the same outline. As simple as that might seem there, it tells you all the good stuff you need to know in order to structure these things. And you'll need to know that structure to do your assignments this week too. By the way, I'm not showing you by accident. It's very deliberate. What about the balance sheet? What are the important elements there?
Asset, liability, and owner.
Yes. And let me tell you a secret. The more tired you get of saying it, the better. That means you're getting it. Because if you don't keep saying it, you're not going to remember. Ultimately, you can start stumbling, like that. But once it starts flowing out of your mouth, like, man, I know that. And it just drops off your lips, then you know that you're on your way to where you need to be. And the statement of cash flows, what are the items there? It starts off with operating activities plus
Investing activities, financing activities.
which equal
Change in
Change
cash.
in cash flow.
minus
Plus beginning balance.
plus beginning balance. Somebody's looking equals.
And then cash
And then
balance.
cash balance.
So basically, this statement is showing who is looking, all the cash that came in and from where, and all the cash that was spent and for what. And even a lot of owners don't like to know that because sometimes folks are doing stuff they shouldn't do. But if you're doing everything right, this is a very good statement to show you what's happening to your money, not revenue. Because remember, all revenue is not cash, right? Right?
Right.
But all cash is cash.
Yeah.
Yes.
Okay. So this statement of cash flow is not an income account. Statement account is a cash account. So you want to know what's actually happening to your cash? That's the one you need to look at. Because you keep looking at revenue and expenses, you're not going to see what's happening to your cash completely. And some people, owners, others still don't get that because they see the cash statements being very cumbersome and tiresome. So they don't even bother to look and they don't want to hear what you have to say about it. All they want to hear is how much I make this week and how much I deposit in and what bills I got to pay again, like that. But there's more to staying afloat than just that, especially as the company gets bigger and bigger, especially as the family gets more and more sophisticated. See, wife starts making more money, husband starts making more money, wife starts making more money than husband. Then all of a sudden, the accounting, they stop accounting with each other because they want to start hiding stuff now. Just like the owner that withdraws money and don't tell the accountant that's trying to hide it. So this stuff is very real in practice as well. Remember, when you're poor, you tell each other everything, like when you're first starting out. And then 10 years later, when you have stuff, you start telling each other less and less. Owners do that too. So this accounting is very intrusive, as it's supposed to be. And anybody who doesn't want to be intrusive, they might be up to something that you don't want to know, in companies especially. By the way, is a family a company?
Yes.
Yes, it's a partnership. One of three companies. Remember those three types of companies? Owner's equity and you mean if I ask an exam what are the three types of entities, what are you going to say?
So the
Sole
partnership,
partnership
and
cooperation.
and
cooperation.
cooperation.
Thank you very much. I'm happy already. So the family is which one of those three? It's a partnership by definition. So it is a business as well. Okay. And so a lot of these things that happen in businesses happen in partnerships, families too. That's why many are successful and some are not. But that's not the only reason, of course. We're talking about purely from a what? Financial perspective. All right. I'm not going through the net income thing. We know how to come up with net income. But you still have to read that crap. Not crap, you know what I mean. All right. Just so you can remember. Okay. Now, in terms of measuring income, there are three important things you need to know. Three assumptions. And you'll notice some references to Netflix as you read or some other company. Please read those examples so you can have an idea of what's going on slightly in the real world. And notice the text would use a company name that's familiar to us like Netflix, Microsoft, and companies that we're familiar with intimately, so to speak, depending on whether we watch TV or we have computer software. Okay? So the three assumptions you need to know is the first one being continuity. Anybody read that yet? Did anybody? Hold 1 second for me, please. Hello? Yes. Yes. Yes, you're on the way. Okay, well, you can come if you get stuck, give me a call. Okay, bye. What's your name? Theo? Okay, bye. Are you guys still there?
Yes.
Great. I'll tell you a little story, just to digress for a moment from this accounting crazy stuff. Yesterday, I went in to make an appointment for somebody to come today to fix something. So I said, will they be here in the morning? They said, oh, certainly not, sir. We're busy. They'll be here in the afternoon. I'm like, okay. Will you be there? I said, yes, I'll be there. You heard my phone ring, didn't you?
Yeah.
Yes.
Who do you think that was?
Ones who could be there in the evening.
The flicking evening guys. Now, watch this, students. Welcome to the real world. I have two choices. I could say I'm in the middle of a lecture. I have to reschedule, right? Can you come in the afternoon? I say, oh, no, I don't think so. But then you were scheduled for the afternoon. I don't believe me now. Or I have to disrupt slightly what I'm doing when they flicking show up to accommodate them if I want that task done when?
If you want it done.
Today.
Done today.
Yeah. I could get it done sometime in the future. But if I want it done today, when Mr. Afternoon shows up soon, here's what I have to say. I have to say, students, will you please accept my apology? I have to break for a few moments. Keep reading until I return because I have to deal now with Mr. Afternoon. Imagine that.
Our world.
Yes.
Of course.
No business
Welcome to the
ethics.
Bahamas.
No, absolutely. As much as things change, they remain the
See?
same. This is the same where it was when I was shooting marbles when I was 10. And my grandfather said, Mr. Thing is showing up in the afternoon. And when does he show up? In the morning. And my grandfather says, aren't you supposed to be in the afternoon? He says, yes, but they send us. And I'm like, man, nothing has changed in a million years. All right. So if you hear me say, excuse me again, keep reading until I get back. I'm dealing for a moment with Mr. Afternoon because now I have to get up and what? Open the door, take them to the problem, hope that they don't run off with 3 plates and a spoon while they're fixing it because I can't watch them. All because they didn't come in the afternoon. It's my foot. If I want it done when?
Today.
Today.
And do they care if I say I don't want it done anymore? Come back? No.
No.
Who suffers?
You.
Yeah.
Thank you.
Yours truly.
Welcome to the
suffers.
Bahamas.
Truly. Welcome to the Commonwealth of the Bahamas. How old are we? 40 what? 40 something.
44.
Yeah, I guess we're still young.
Yeah, no, we more than an adult. We don't excuse 40 years, 40-year-olds.
No, especially for the simple things. By now, we should at least know 1 plus.
1.
That's my foot.
Well, so
Yeah, but we still
they
say
need
1
a
plus
good
1.
account,
Yes. But the
and
way
so
we
they
do-
could have a weekly report of their cash flow.
My. I told you, this all tied and then somewhere, somehow, accounting is very invasive. Whether you realize it or not, it is in everything. You just need to know how to connect the dots. Okay? And to make matters worse, when I went in yesterday, they said, we can't do nothing for you, son, dude, sir, until you pay us in what?
Full.
In advance. So we have an accounting transaction. I had to pay the whole thing for the part and the service first for Mr. Afternoon. How's that?
For Mr. Evening
Yeah, Mr. Evening, who shows up before even
in the
12 o'clock.
afternoon.
Yeah, I said afternoon is fine. Why? Because I know I have an accounting class. Now I have to suffer the indignity potentially. I said after 12, right? He said, yes, sir, long after 12. I'm like, okay, that's good. And I'm like, thank God I don't have to interrupt my students to mess with Tom Jones. All right. My. Okay. So where were we before the phone rang?
Continuity.
Yeah, income assumptions. What are the 3 assumptions? The first one is continuity. Continuity requires that certain expenses and revenue transactions be allocated over what we call several accounting periods. Now, I wonder what that means. Anybody read that and understood that? Well, it simply means this. Despite all that you have to read, it means for the accountant, we operate as if the business will continue to operate indefinitely. Doesn't matter if you're going to close next year because of COVID. We don't say since you're closing, we're gonna put eggy stuff in the accounts. We record things incorrectly. We won't record anything. Accountants don't operate that way. We operate on the basis that you will be in business indefinitely, and we will continue to do that until you actually
Wow.
close
Close.
and stop doing business. That's continuity. Periodicity means accounting records are going to be done usually for 1 year. Now I've simplified it, but you still have to read it though. Unless you just want to go with my simplistic version and miss all the other good stuff. Okay, so periodicity means accounting periods are usually 1 year. So your financial statements are usually prepared annually, even though we can do it monthly, quarterly, and semi-annually, or any other time. The standard operating time under generally accepted accounting principle is as at 1 year. If your boss needs it for a month, no problem, you can do it if your records are done properly. If he needs it quarterly, you can do it. If she needs it semi-annually, you can do it. But it should be done at least once a year. That's the periodicity principle assumption. We are required as accountants to follow it. And then thirdly is the matching principle, which simply means that if a transaction occurs in 2021, it should be posted and journalized in 2021, not next year. Does everybody get that?
Yes.
All revenue should be recorded that are generated this year should be recorded this year. All expenses that you incurred for this year should be recorded this year, not next year or whenever you feel like it, to make things look the way you want it to look. Some companies have so many expenses, they decide they're going to record some this year and some next year. You cannot do that. That's wrong. Please don't let anybody let you do that, okay? Whatever revenue and expenses are incurred this year, they have to be recorded this year, this month. If they're incurred in March, they have to be reported, posted and journalized in March, not April, not January. Oh, you forget to record it in March. Go back to March and put it in. That's how it works in accounting. That's what the matching principle is all about. Do not be unequally yoked. Remember that one? Anybody in this class unequally yoked? No answer. That's okay. I don't expect you to answer. In accounting, you're not expected to be unequally yoked. All right.
Mr. Wilkinson,
Yes.
what would happen in a case where you may have classified something incorrectly and the following year it's discovered?
Depending on the nature of the problem, you cannot go back in the previous year and do a reversal because the financial year is closed, right?
Yep.
Right? So if that happens and you discover the next year for the year before, there's an accounting process whereby you can go, whereby you can make a journal entry to adjust certain specific accounts. For example, if you have a profit problem from the previous year that you missed, in the current year you discovered it, you go, there's an account called retained earnings. Remember that account?
Yes.
Yeah, you go to that account and either increase it or decrease it, depending on whether you discovered an increase or decrease in profit the following year for the year before. Okay, so we make an adjustment in a specific account such as retained earnings if we discover the error the following accounting period or year. Okay? So that's a good point. You
So,
won't see.
so on that journal entry, when you said that we would record and retained earnings, would you put adjustment for profit 2018? What would be like basically your description or your narrative for your journal entry?
Okay, let's say next year we discovered that profit should have been $10,000 more, right? Let's say next year you discovered profit was should have been $10,000 more than reported last year. Does that make sense, anybody?
Yes, I'm following.
Yeah.
In other words, last year recorded profit is 20,000, it should have been 30,000, but you don't discover until this year. So now it means that if profit was short last year, it means retained earnings is what?
Go up.
Well,
Decrease.
remember, what is retained earnings? It's just adding profits year after year. Remember
Right.
that?
Yes.
Yes. So if you did not record the correct amount of retained earnings last year, just short by 10,000, it means that last year retained earnings was short by 10,000.
10,000.
So this year, when you find it, you have to increase retained earnings by 10,000.
10,000
So what's the normal balance for retained earnings?
credit.
Yes. So you know right away you have to credit retained earnings by
10,000.
10,000.
absolutely. And the account that we debit will be based on the nature of the situation when we discover the problem this year. You follow? So you still do a double entry.
So what if it was overstated? What if it was supposed to be 10,000 less?
Then we do the opposite. We debit retained earnings and we credit an appropriate account, depending on the nature of the problem and discovering it. Does everybody see that? In other words, the adjustment is made where? In retained earnings. Okay? So if it's short, we credit retained earnings this year for the short. If it's over, we do the opposite. We debit retained earnings. My. Give me a moment. Mr. Afternoon is calling me again. Yeah. Okay. Yes. Never thought of it. Yes, thank you so much. Hello.
Yes.
Ah, thank God
We're still here.
you guys are still
Yeah.
here. Thank you so much. Lo siento en español. It means I'm sorry in Spanish. All right. So those are the three assumptions. Please make sure you know them because I might ask you them in the test. Very likely because they're very important. Read the whole context, but as you can see, each of them, they're not difficult assumptions once you understand it the way I presented them to you. When you read them, it's just going to give you additional information around the assumption for new kids on the block like yourself. Okay, so please don't fail to read it. All right. When do accountants recognize revenue? We don't just recognize revenue because somebody said so. Okay, folks. When you read this stuff, if you haven't read it yet, you'll see. Uh, Revenue is recognized usually when there's evidence that a transaction has occurred, that a product or service has been delivered one way or the other, not planning to be delivered, that the price is fixed and everybody's happy and satisfied, and that if you haven't gotten the goods yet, you feel reasonably comfortable that you will get the goods. In those four instances, we tend to say that revenue should be recognized. Now, this last one called collectibility is reasonably assured. Reasonably assured is a tricky expression. You only want to go there when you have a good working relationship. It's standard. You've been involved with a particular supplier or client or whatever for a while, and you're comfortable with them. Otherwise, you don't want to recognize revenue until it actually happens. Okay, that's the whole idea. We don't want to recognize any revenue that is helter-skelter until something happens. Okay. Expenses, on the other hand, we tend to want to recognize them mostly when they are paid. We will not make a transaction for an expense until we normally pay them. Now, there are one or two exceptions to that, but that is the rule. If you haven't paid it, generally you don't recognize it until we pay. There are some expenses that we do recognize and we set up what we call a payable account. And you will see that very shortly. Okay. All right. And so having said that, we can now get into the discussion about which chapter 3 is all about, and it's called adjusting the accounts in the financial records. Okay. Now, what do adjustments mean? Adjustments mean that based on certain transactions at the end of the month or year, depending on when you're preparing financial statements, we need to go back and make certain adjustments so that the accounts are correctly reflecting what's really the position. Okay? Remember that prepaid rent that we paid? You remember that? How much was that?
Prepaid rent.
If somebody's searching the general ledger or the transactions, that's good. That's what I want you to do because that's what you're supposed to do in real life. You don't guess.
Prepaid was 3,200.
200.
Correct. So how many months does that cover? Anybody remember?
July to August.
How many months is that?
2 months. 2 months.
2 months. See how technical accounting can become? And that's how you have to be thinking. Because if you're not thinking like that, you're not going to do this thing right. So that prepaid amount of 3,200 represents 2 months of rent that you are due to by the landlord. You haven't spent the time yet. You haven't used up the rent yet. So it's an asset for you until you use it up. And adjustments occur after you've used it. You'll see in a minute how that works. For those of you who may not actually have read this, or who did read it and still didn't get it. Okay? Does this trial balance look familiar?
Yes.
Yeah.
Okie dokie. That's what I'm talking about. I love to hear yes with no questions. Even though if you have questions, I'm the first one to say raise them. But if you just say yes, it means like this stuff is beginning to sink in. All right. What is the amount of revenue on this trial balance for the design?
$12,400.
Okay. And I ask you that arbitrarily so that you can read into it, look for it, find it, get intimate with it. Because that's the only way you're going to do it well. You get into it. As you will see when I give you your assignments, please don't let me sign off without giving you assignments. That would be a tragedy. Then I have to go and email it to everybody. Okay, so what are the 4 types of adjusting entries that we normally see in accounting? Type 1, anybody?
Says allocating recorded costs between 2 or more
Recorded
accounting
expenses.
Okay, type 2,
Recognizing unrecorded incurred expenses.
type 3,
allocating recorded unearned revenues between 2 or more accounting
and
periods.
finally type 4.
Recognizing unrecorded earned revenues.
Okay, so those are the 4 adjusting entries that we would see in accounting normally. Now, that may mean something to some people and nothing to other people at this point. Like, what the hell is that?
That's me.
Okay, and that's okay.
But doesn't this answer the question that she just had about if something needed to be adjusted?
Yes, it does. It answers one of the 4. How's that? And there are 3 other types that you need to know. Okay, but yes, it does. Okay. Now, also, adjusting entries are classified in 2 basic categories. Either they're deferrals or they are
Accruals.
okay. So by definition, what is in a deferral?
Postponement of a recognition.
So if you are putting the recognition of an expense aside until the future, you paid it, but you haven't recognized the expense yet, that's a deferral. See how simply I put that? If you paid it, but you haven't recognized it as an expense until some future date, that's a deferral. You're putting it off until the future. That's what deferred means. Like we're deferring this wedding because one of us is not ready to marry.
Payments.
Yes. Okay. On the other hand, an accrual is what? The recognition of a revenue that has not yet been
Billed.
recorded or billed, yes. Okay. So those are your two types of adjustments, deferrals and accruals. And those two adjustments, those four types that we saw earlier, fall into one of those two categories.
Excuse me, Mr. Wilson, Mr. Wilkinson.
Mhm.
What like how we had the banks are doing loan deferral. That's the
Right.
same as a deferral? No, loan waits.
It's the same in principle, yes. In other words, when the bank does a deferral, it says you don't have to pay your loan payment now, you can pay later, 6 months later.
No.
Right? That's what a deferral is. Okay, absolutely. However, they are still accruing interest during the 6 months. So that means all the interest expense and principal that you owe, you still have to pay it once the deferral period has passed. And a lot of people did not understand that. They think a deferral means that they didn't have to pay for 6 months and therefore they don't owe that 6 months. Deferrals don't work that way. Deferrals only put it off for a future date, but you still owe it. Do you follow, folks? Everybody get that?
Yes.
Yes.
Okay. Very
Yes.
good question. Very good thing to know. All right. So the first adjusting entry that we're going to look at is the one somebody raised the question about prepaid expenses. So we go down to the transaction, July 31st, the expiration of 1 month's rent. How much rent was used up in the first month?
16.
1600.
1,600.
So notice at the end of July, we make an adjusting entry on July 31st for the amount that was used. Do you see the entry? Whatever is used, we record it as a rent expense for 1,600, and then we reduce the prepaid rent account for 1,600 because that is no longer an asset, correct?
Correct.
Okay. And that's it for the prepaid rent adjustment. And then once you record the journal entry, you follow the same rules as before, you post it. Okay? Hold 1 second for me. Yeah. I did. So if all goes well, I should be there. Thank you very much. Okay, so we debit rent expense for the rent that we used up for that month, and we credit prepaid rent because that part of it is no longer an asset. So that's the first adjusting entry. Very simple once you understand it. And then, of course, we post it. So once we post it, what is the balance in prepaid rent?
It now becomes $1,600.
Yes, not 32 because we already used up what? 1 month of rent. Do you follow?
Yes,
If
sir.
you do not make that adjusting entry, the balance in prepaid rent would still be what?
3,200.
Which would be incorrect, correct? Correct?
Correct.
Correct.
So if you have the question in your mind, why the hell we make adjusting entries in accounting anyway, to stress accountants out, it's not to stress you out. It's to correct the books so that they reflect what should be reflected for these type of transactions. Do you follow?
Yes.
Okay. So if we do not do this adjusting entry, prepaid rent would be overstated by 1,600, correct?
Correct.
That's correct.
And the rent
Yeah.
expense account would be understated by 1,600 because you would not record the expense if you don't do this. Does everybody see that?
Yes.
Yeah.
Yeah.
So welcome to accounting. Now these adjusting entries, please read the comments carefully again. Even if you read it already, read it again. Make sure you're clear because it tells you exactly what's going on again. Same as I told you. Okay. Now, July 31, we made an adjustment for supplies of how much?
1540.
Yeah, because we said supplies were consumed. Do you see that word?
Yep.
What does consume mean?
Used up.
Yeah, yeah, and but if you don't read that, you'll say, why are we debiting supplies expense? Because you didn't read consumption. Remember what I told you, if you don't read it, and you don't read the comments, and you don't read the transaction information completely, you're gonna miss stuff. Just like if you see somebody when you see some woman put your hand on your husband's shoulder, she may just be condoling him because he lost something or had an issue. And you say, what the woman like? And then you lick all two of them with conch shell incorrectly. My point?
Very deep.
I'm sure
Yeah.
that's known to happen.
Oh gosh.
People do it, they get dead, man. Shoot somebody even without knowing the truth. Without checking. See, that's my point. All right. So please read the information carefully. So in this case, we consume 1540. So we debit supplies expense and we credit.
Office supplies.
Yeah. So what's the correct balance at the end of July in office supplies now?
$3,660.
Correct. And then we show the expense. That's why we have people taking inventory every month or every year. Do you follow, folks? To see what was used up. You get that?
Yeah.
In this case, in July, how much was consumed?
1,540.
And how much supplies are left?
3,000.
Yeah.
660.
Yeah, and in August, we do the same thing and make a similar adjustment. It's as simple as that. Once you understand it. All right, depreciation for the month was how much?
$300.
So if depreciation for the month is 300 in equipment, then you have to debit what?
Depreciation expense.
And credit a special account called.
Accumulated depreciation.
And the only way you can know special if you've read it or if I say it. And remember what I said, even though I say it, still read it. A special account called accumulated depreciation. And notice what happens when we do that correctly. In the balance sheet, we have property, plant, equipment, office equipment. The total is how much?
16,020.
Yeah, the same equipment we did way back in chapter 2. Remember that?
Yes.
Yeah. Remember, accounting bills, you have to do it correctly from the beginning, or else you're gonna, if you don't do it correctly from the beginning, you're gonna have a mess in the middle and a bigger mess at the end. Just like choosing somebody to be your mate for life. If you don't do it right at the beginning, you have a mess in the middle and a bigger mess at the end. Same principle. Maybe it's not accounting, but it's a form of accounting, isn't it? Like we say in Bohemian newscast, I ain't tell you. Okay. I'm just being the devil's advocate, so I'm just all right. So the depreciation for the month is subtracted from the total equipment cost. And so after July, what's the balance of the equipment account?
$6,020.
After August, what would be the balance of the equipment account?
$16,020.
That's after July.
Oh, that's after.
After the August adjustment, what will be the balance?
Okay, you have to take $300 off for that.
Oh man, this is great. I love it. That means you guys are actually into this crap. Not crap, you know what I mean?
So that'll be 15,720.
Absolutely. And what will be the total accumulated depreciation after August?
15,720.
Accumulated depreciation.
$600.
Absolutely. Be careful. The language will get you. You have to be very specific. Watch the words in accounting. One word will throw you off if you're not keen on what you are hearing or seeing, not only in academia, which is what we're doing, but even in the real world. That's why we have something called mistakes. Sometimes they're little itsy bitsy mistakes. Other times they are crucial. Okay. All right. So that's the first type. Type 2, recognizing unrecorded incurred expenses. All right. And we have the example where somebody works overtime for 3 days, the 29th, 30th, and 31st, so but payday is on the 26th. So therefore we owe them for how many days?
3 days,
That's right. And that's those 3 days work out to be?
$720.
Yes. Now I'm not going to go into the arithmetic of 3 days. All of you should be able to do that. And if you read the section on it, when you finish reading it, you'll know that how we got the $720. So please go through that exercise. And when you're done, you'll see it's 3 days, which equals $720. So the adjustment at the end of July for those 3 days, as at the end of the month, would be what? What's the journal entry?
$520.
Debit wages expense for 720 in credit.
Wages payable.
Wages payable for 720. Simple. When you look at the ledgers, you'll see if we do not make this adjustment at the end of July, then wages expense for July will be understated, wouldn't it be, class?
Yes.
Yes. You can't say, well, anyway, we done pay on the 26th, we ain't got to worry about the next 3 days. Maybe you could say that when you're having happy hour and you have a couple drinks. But for accounting, you can't say that. Accounting, you must account for all the days. And this is where the adjustment comes in. Do you follow? No?
Yes.
And why do we credit wages payable? Because it has to be paid in the next pay cycle, next month, in August. Do you follow?
Yeah.
Yes. All right. The third type of adjustment is allocating recorded unearned revenues. So how do we do that in accounting? It's very simple again. What's the transaction, anyone? Performance of services for which cash was received in? July 31st adjusting entry, performance of services
Advance.
in advance. So in advance mean you got the money up front?
Yes.
Yes.
Okay. But in this adjustment, what is happening? We debit unearned design revenue for 800 and credit design revenue for 800. What is that telling us?
You perform the service,
Yes, for the value of?
$800.
Absolutely. Okay. So that unearned revenue, part of that is now been what? Earned?
I didn't
Yeah.
hear you just now. You said
For the unearned revenue that we recorded earlier for $1,400, how much of that has now been earned?
$800 of it.
Yes, so you have to make this adjusting entry on the 31st of July to show that 800 of that 1,400 has been earned. If you don't show that, you'll be showing unearned of 1,400 still, which would be wrong. Do you see that, class?
yes.
That's why these adjusting entries must be done. After the adjusting entry at the end of July, how much remains in unearned?
600.
So you still owe how much of service?
600.
Yes. So please go and provide that service to your client as agreed, because you still owe it. They give you the money, go and do it. That's what it means. And design revenue has gone up by $800 as a result of this adjustment. If we don't make this adjustment, design revenue will be under or overstated?
Overstated.
Understated.
Understated.
If we do not make this adjustment to design revenue, it will be understated. This adjustment increases design revenue by 800. so that we show the correct amount of design revenue. Without the adjustment, it would be understated by how much? If you do not do this, $800, yes. So you can see this chapter takes you into the nitty-gritty for these adjustments. They are not hard. You just have to immerse yourself, which means that after class, while everybody's at the mall, now you have to go back and say, let me read this chapter again. Let me go to these adjusting entries again. So when I get my homework, I'll know what to do and beyond. So when I do my examination, I'll know what to do and beyond. Okay? And then the final type of adjustment is recognizing unrecorded earned revenues. So you've earned it, but you haven't recorded it. So you have to make an adjustment for it now. So if we go down to July 31st, accrual of unrecorded revenue for $400. We've earned it, but we haven't recorded it. How much is that amount?
400.
How much did we earn? $400. We haven't recorded it, so we have to bill the client for $400. If we bill them, that means we didn't get cash, so we have to create what account?
Accounts receivable.
That's why you have to do billings correctly, otherwise you rob yourself. Do you follow that, folks?
Yeah.
If your accountant is not billing properly, then you may not send a bill out to everybody who owes you money. That's a tragedy, isn't it?
Mhm.
So the
Yeah.
billing process has to be precise. A lot of companies are losing money because they're not even billing, they're just winging it. Well, what they remember who owe, not a good idea. So in this case, somebody owes you money, 400 for a service you have provided. So you already provide the service, so you debit accounts receivable for what they owe you, and you credit design revenue for 400. So design revenue goes up again by 400, and accounts receivable goes what? Increase or decrease?
It decreases.
Accounts receivable decreases here?
No, it
No,
goes
it
up, it
increases.
increases,
Of course.
goes
It
up.
increases.
Of course, a debit to accounts receivable, it's an asset. What do debits do to assets? They increase them.
Yeah.
You know, the rules still apply.
Yes, yes.
Yes, absolutely. That's the beauty of accounting. No matter who's drunk, who's crooked, who's crazy, and who doesn't know what's going on, the rules of accounting still apply. And as the professional, you're required to apply the principles no matter what. No matter what. If your bishop tells you to change it in the church accounts, you have to tell him in Jesus' name, I'm not. Excuse me. I
You're
know.
not changing it.
No, it doesn't matter if it's the bishop. The hell with the, I shouldn't say the hell with the bishop. The hell with the bishop if he's trying to get you to do the what? Wrong thing. You still have to follow your principles no matter what he tells you about the church accounts. Even if he says, I'm going to change you as the treasurer or bookkeeper or accounting because you keep going against my wishes. I said to fix it the way I want it. And you say, but you have generally accepted accounting principles to follow. Well, you have to decide whether it's going to be my principles or generally accepted accounting principles. And if you're the proper accountant, you have to say generally accepted accounting principles. And then Bishop Tingham can do as he sees fit. That's how accountants are supposed to operate in the real world, no matter what, no matter who. That's why we have principles, which is why the Bahamas and the rest of the world is in trouble now because we keep moving away from principles. Home or work or church or parliament or wherever the hell it is, it's the same problem. We keep moving away from principles. Okay, just thought I'd throw that in there to remind you in case. All right, so those are your 4 basic types of adjusting entries. Practice them, practice them, practice them until you're tired. I'm going to give you homework in a minute to force you to practice them, but I don't want to force you all the time. I want you to practice some of them on your own, because the more you practice, the better you get. All right. One final example for you to look at, just in case somebody decides to not look at it. If you notice, this prepaid insurance account at the end of June was how much?
$670.
Okay. And the insurance expense for the month of June was?
120.
Okay. So we add that 120 to the insurance at the end of June. So the potential cash payments for insurance is equal to what?
790.
790. And then we subtract prepaid insurance at the end of May, which is
$480.
480, and therefore cash payments potentially for the month of June.
104.
For the month of June would be
$310.
310. Now that is just there to show you how we go about analyzing these transactions in order to help us to do our adjusting entries better. So to get a scenario in the real world, for example, or in test or homework that requires you to look at different scenarios to come up with the correct adjusting amounts, and you'll see that there are different ways to look at it. Okay. Now you might say, well, how do you become good at adjusting entries? Well, it's the same as anything else in life. You become good by doing what? Hello?
Doing it over and over again.
Excuse me,
Practicing.
thank you.
That's-
Practice, 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 practice. I wish there was another way. Sorry, that's another way. All right. All right, so take out your pen and paper. I'm going to give you assignments that is due on or before next week's class. You have until next week, Friday, to send me an email with your assignments. Okay? Of course, if you get stuck along the way, call a colleague, send me an email so that I can respond to your concerns so that you don't get stuck in the middle of homework and don't get it done. Those who send in the homework between now and next Friday will get credit under my percentage allocation. If I get the homework complete, I'm not so concerned about whether you do everything 100%, even though that's fabulous. And even though if you get stuck, please find a way to unstuck yourself by checking with me or your colleague or Tom Jones or anybody else for that matter, just so that you can get through. My concern is primarily that you actually do it. So please don't ask anybody else to do it for you. That would be defeating the purpose. That will not help you. I want you to suffer through it, quote unquote. Because then that is the only way you will be good at what you do and getting this done. And for the future, and for your exams, and after the semester is over, and so on. Okay? All right. Everybody has pen and paper?
Yes.
Okay.
Yes.
From chapter 1, page 31. Question P3.
We need to confirm these are the same ones.
Yeah, because we have a different book,
These questions are from your new text.
Okay, great, great.
That's a good point. Yeah. Chapter 1, page 31.
It's 31.
Question P3.
Question. Okay, so that's preparing an interpretation of financial statement.
Uh-huh. P means problem. Problem 3. Okay. Say chapter 1 again. Page 32.
Okay.
The next page. Question P5. Again, these are all from your new text. Because I am looking at that as well. Never mind this thing. Chapter 2, page 78. Question P4.
Okay.
Hey, you could say that again, please.
Chapter 2, page 78, question P4. And then finally from chapter 3, page 113. Question E, 9A.
Okay.
Question E, 9A on page 113. Now, folks, let me just say
That's
this.
E or B?
E as in Edward. E means exercise, 9A. P means problem in this text that you have. Okay, just so you know. So some of them are exercises and some of them are problems. Exercises are a little easier than problems, generally speaking. Okay, for the purposes of your text. All right, so that is your assignment. It is not something you will get done in a matter of a minute or an hour or two. Some of this will take some people longer than others. It doesn't matter how long you take, suffer through it. If you get tired of it, put it down, take a nap, go for a drive, spend money in the mall unnecessarily, whatever you need to do, then come back and go at it again. Please start as early as possible, which is today, and do some every single day. Plan your work until you get it all done. As soon as you're done, you don't have to wait until Friday. You can send it to me before Friday so that you get it out of your hair. Or you might do like some of my other colleagues back in the day when I was in university doing this stuff, and your other colleagues today. Wait until the last minute and suffer immensely. How's that? Just trying to get you to start early, okay? Last minute stuff is a pain in the butt. All right?
I was able to download the text that we received.
Yes.
To WhatsApp, and it's I find that to be quite good because it's portable, so I could read.
Okie dokie. Are you able to download it?
Yes, sir.
So are you able to email the download to me? So
Yeah.
I don't have to download it?
Yes, I have it in PDF.
Yeah, that's fantastic. When you hang up from the session, please email it to me so I can reference both of them as we go forward electronically.
Okay.
Okay. The only problem with downloading it, you can't, well, I guess you can have it on your phone, but I'm an old school guy. I like to have a textbook as well as E. But yes, please, so that I can reference both of them for the purposes of your semester.
Okay.
Okay, I would appreciate that. And then the final point before you go today, let us all agree that the midterm exam is in week 7. According to my schedule, week 7 is April the 3rd. Is that correct on everybody's chart?
That's incorrect.
That's incorrect?
No, it's supposed to be
April the 10th.
April 10th.
Okay, so we started our class when?
April 10th, you said.
When did we begin? 4 weeks ago? Schedule, we are in week number 4. Today makes week number 4. So we go back 4 weeks. Which day of the month is that? Which Saturday is that?
February 20th.
February 20th. All right. So that means we've done 4 weeks today, which ends March the 13th. 3 weeks from now, which is the 7th week, will be 8.
You're correct.
Yes, April the 3rd.
So we moving it to April 3rd and not April 10th?
No, it should be April the 3rd.
But in our defense, I don't think we covered any material on the first week.
I agree.
Well, yeah, that happens. But in any
Yes,
event,
I think that's why he said the 10th.
in any event, week number 7 will be April the?
April 3rd.
Yes. So that means we have 2 more sessions before your midterm. So somewhere along the way, please go ahead and read chapter 4. And if you feel froggy, chapter 5. God forbid, the more reading you do, it cannot hurt. I know you have time constraints and all kinds of things going on, but you know how lecturers go in institutions of any kind. We don't assume you have anything to do except what we have with you. We all know that that is a lie. But in any event, next week we'll be picking up with chapter 4 and perhaps even some of chapter 5. And so by the time we finish week 6, we probably would have finished at least 6 chapters.
So
The
the
All right.
midterm would cover
So that's
which
which
chapters?
date?
the midterm will cover everything we've done from February the 20th until the end of class in week number 6.
So the proposed chapter, you should be finished chapter 6 for the exam, or chapter
That's the
7.
chapter 6 more than likely. I doubt we'll get to chapter 7. But you never know. Miracles happen. But we'll see.
Okay, let's roll.
Yeah, let's roll. For now, please read chapters 4 and 5 for next week. And then if things go according to plan, we'll be doing chapters 6 and 7 for the final week of class before your midterm. If we don't get through all of 7, you will only be responsible for where we stop. I will not test you on stuff that we have not discussed.
Okay, and the midterm is the 3rd. It's the 3rd. It's the 3rd.
Yeah, April the 3rd.
That means I don't have an Easter break vacation.
Well, nobody's traveling.
She made a mental break.
No, like how teachers we have a Easter break like to do. Like I was planning to travel.
Well, here's here's what you have to do. You will have the Friday to study for your exam on Saturday, and then after that, then you could go and party in your mini and all that.
Wow.
Yeah. So you.
Okay, I'm focused. I'm focused. It's
Okay,
all right.
great. So, but just think of it this way:
That's the holiday.
your whole Easter will not be ruined. Only Good Friday. So Good Friday, the good thing about Good Friday this time is you have that day to study, no work. You can study all
That's
day.
true. Oh, that's true.
Absolutely.
No distractions.
And then come into your class for Saturday, write the hell out of your midterm, and then start partying like right after at 12 o'clock. You just put on your
Exhale.
party clock and knock yourself up. How's that?
Hey, perfect timing.
Absolutely. Couldn't be better. So you get to have your cake, which is a day off to study, to do your final study stuff. Please don't wait until then to do everything. For God's sake, start studying now. But you have that day to bring it all together. And then after your exam on Saturday, you still have the rest of the holiday weekend, including Monday, to have fun. So you get your cake and you get two. How's that?
We hear you. We hear you.
You know what we hear you means.
Dying celebratory.
So when I hear we hear you, to me that means whatever. The hell with you.
We're happy.
You. That's your business. Also plus some other negative things. Like I hear you. Even when my wife says I hear you, that's not good. Owen, if your wife says I hear you, that's not good. I hear you is not a yes nor a no. It's just I hear flicking you. So anything else could happen in between. And it's, I hear you. All right. Is there anybody in the class whose name I didn't call earlier? Okay, I think we have everybody. All right, class, great. You guys have been fabulous as usual. Please go ahead and do your assignments. They will do you a great service in your midterm exam and beyond. If you have any issues trying to get through them, please send me an email. Or if it's a short question, you can send me a text and say, excuse me, what is a debit? And then I won't answer. Why wouldn't I answer if you say, what's a debit?
Plus, you ought to know by now.
And even though I said I wouldn't answer, and if you say, well, excuse me, sir, I said,
Mr. 24 hours.
yes, I said, what's a debit? Then I'll figure out maybe this student does not really know for some reason, then I'll still answer. I wouldn't say, what the hell's your problem? You ought to know. But I'll wait until you ask a second time for something as simple as that. If you come back and say, what's the debit the second time? Then I'll say, you know what? This is a very serious case. I need to respond to this one. Because some people might still be stuck on that. That is a possibility, even though you ought to know. All right? The point I'm making is feel free. If you get stuck, don't remain stuck, get unstuck. All right? Any other questions? Fantastic. You guys have been great as usual. Have a great and busy week. Remember, if you're not busy with my assignments and you're reading, you're not serious, quote unquote. Get it together. You only have 14 weeks to get this down packed. Remember, you guys are going to make the group for accounting too. I don't want anybody left behind, like the Marines. No one left behind. All right. Have a great week and be safe.
Yes.
All right. Have a good day.
All right. Take care
Thank you.
and
Good
Okay, take
weekend.
care.
be safe out there.
Oh gosh.